Franny is in New York. Manis, it's a big week for Wall Street banks, but elsewhere outside of Wall Street, plenty happening. Nomura is cutting 20 staffers after reviewing the market and investment banking business. Among those, Jordan Rochester. He's an FX commentator frequently on Bloomberg programming. But overall, of course, this is according to people familiar, it's an effort to trim costs.
It is, and at the same time, you've got HSBC blocking their staff from texting from their work phones. The UK lender disables the SMS function on staff work devices. We have one breaking news line on Iran. The foreign minister calls for an oil embargo. We'll discuss in just a moment.
Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Manis Franny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Biden arrives in Israel with tensions high after an explosion at a Gaza hospital killed hundreds of people. Hamas and Israel trade blame. China property concerns cloud better than expected GDP data. Distressed developer Country Garden is on the brink of its first default, saying it's unlikely to honor offshore payments on time. And 2-year U.S. yields retreat from the highest level since 2006 as solid economic reports reinforce the case for the Fed to keep rates higher for longer. Manis, you broke this news just moments ago. Let me get to the market reaction. The Iran foreign minister has called for an oil embargo against Israel, also elaborating that Muslim countries should boycott Israel. Here's the two-day price chart. We did get this move higher, and we're getting it now, a spike off the back of it. On the day, we're up more than 3%. I know, Manis, you'll have more on that oil market in just a moment. Let me show you what the equity picture looks like, because Goldman talks about the risk of escalation. The risk that this hits oil supplies specifically means that we would struggle for a fourth quarter rally. You can see sentiment is worsening since that headline, since the Iran headline that I just mentioned. S&P 500 futures down 1/3. Tech is faring worse off thanks to higher yields. European equities, those also are turning negative just in the past few moments. And China, it's really struggling with those country garden lines. Concerns that they're going to have their first ever default. Concerns about the overall property sector means it drowned out all that China data, the positive growth data, Manis. China Developers Index, that is trading at a 2009 low.
And there's no doubt about it, Danny, where we are with yields. Yields have been rising over the past 24 hours. You've got two-year paper in the U.S., the highest since 2006. We've got rising yields this morning. Again, the retail sales bolstering the case that the Fed may have to go again. We've just had a conversation with the macro compass. Yields are up this morning on 10-year paper. That it goes back to 2007, where perhaps the Fed does one more and then goes into this pause for 15 months. What is higher for longer? Brandy, wine say they're going to keep going until something breaks. Our last guest says probably something will break outside the U.S. First of all, 10-year yields rise as you have inflation at 6.7%, again putting the odds on the Bank of England having to go again before Christmas and again early in the new year. To the oil market, you showed the chart, we're now up 3.38%. The positioning in this oil market, of course, the hedge funds had slashed their long bets before this massive shift in geopolitics in the Middle East. Novak, the Deputy Prime Minister in Russia, said it's too early to start talking about what OPEC Plus might do in November. Oil up 3.4% at the moment. Danny.
And Manis, I think this just goes to show the sensitivity around oil off of these various headlines. Again, this one being that the Iran foreign minister has called for an oil embargo against Israel. We've seen heightened language around the entirety of the region. So even before this latest line, Manis, we did see oil, as you point out at the top of the show, up about 2%.
Yeah, so that's the velocity of the oil market in the past 30 minutes, and the blame and the recriminations from both sides is mounting in terms of the hospital with hundreds dead in Gaza. So you are just seeing these tensions mount literally 30 minutes after Joe Biden touched down on the ground in Israel. Danny.
Yeah, and of course we should say that that blasted explosion, still we don't know how or what caused it. A lot of blame going back and forth. And amid all of that, President Biden has landed in Israel and met with the Israeli Prime Minister Benjamin Netanyahu hours after that explosion at a hospital in Gaza killed hundreds.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there not sure. So we got to overcome a lot of things.
Now, meanwhile, back in Washington, the U.S. House of Representatives descended into more chaos after Republican Jim Jordan was blocked from becoming Speaker. The hardline conservative failed to win enough votes in the first round of voting. Zach Cohen, congressional reporter at Bloomberg Government, joins us now from D.C. Zach, I thought the language from Jim Jordan was that he had the votes. What went wrong?
I don't know that he ever had the votes, but he did say that he was making progress. And certainly yesterday's vote was something of a blow to his bid for the speakership of the U.S. House after Kevin McCarthy was ousted on October 3rd. He and other supporters of his bid had been estimating that he had, maybe 8 or 10 holdouts to his speaker bid, and then went to the floor yesterday and had 20 people who voted against him, either voted for McCarthy, who was previously in that job, or House Majority Leader Steve Scalise, who had previously been nominated for the job in an internal Republican caucus vote. And now they'll go to the floor again sometime at around 11 a.m. Eastern time in the U.S. To once again try to get Jordan over the finish line But the number of concerns that are being raised by some of these holdouts, mostly from more moderate districts or are big spenders, the people who actually craft the government spending bills in Washington, those are the holdouts that Jordan needs to win over if he hopes to win the speakership.
Zach, good day to you. I mean, the numbers, in the end of the day, 20 voted against him. 6 of them voted for McCarthy, according to our story. The question that goes through my mind is, what does he need to do to win 16 of those over? What does he need to give? What will be the touch point that will convert 16 to his ticket?
And you're right on the math there. Because of the House Republican majority is so narrow, Jordan can only afford to lose 4 votes as long as every member of the House is there. The magic number is 217 of them, because every Democrat has been supporting Hakeem Jeffries, the minority leader from New York. The problem for Jordan at this point is that the opposition to him has a number of concerns about his speakership. He's been a rather hard-charging and oppositional leader among House Republicans to the Biden administration, a chief defender of Trump, and that's an issue for some Republicans who are seeking re-election in really competitive swing districts. There are others that are looking for assurances that Republicans would tackle certain tax deductions that were capped during the Trump administration. Others want to see support for victims of the 9/11 terrorist attacks in 2001. And so the issue here that Jordan has is that as long as he's providing some assurances to more moderate members, that could alienate more conservative members who are already in his corner. He's got a really narrow path here to the speakership.
And Zach, as we mentioned, we have President Biden in the past hour or so touching down in Israel. His trip, perhaps, is going to look very different. That meeting in Jordan being called off. What is the goal now? Does that need to shift, given just how heightened tensions have gotten in the past 24 hours?
Yeah, Biden obviously touched down in Israel in hopes of showing support for Israel, the U.S. being obviously Israel's longest ally in the world. Netanyahu notably pointed out that Biden is the first American head of state to actually visit Israel during a time of war. So a rather extraordinary moment for both Washington and Israel. The issue here is that, obviously, as you mentioned, the trip to Jordan was scuttled after this explosion in Gaza, where Israel is blaming an Islamic terrorist group for a rocket misfire, and countries in the Middle East are blaming Israel rocket fire for the explosion of that hospital that has killed hundreds and has really left a mark on Biden's trip to Israel as he seeks to avoid a broader regional conflict. The U.S. officials in Washington have been very clear that they support Israel's right to defend itself, its right to go after Hamas in the Gaza Strip, but concerns remain about the loss of life, especially on the civilian side in the Gaza Strip.
Okay, Zach, let's see how this day on the ground rolls out for the president. Zach Cohen of Bloomberg Government, keeping us abreast of the president's trip and all things in Congress. A quick check on the commodity market for you. You have this spike higher on oil on the very latest news headlines. We've moved as the Iran foreign minister calls for an oil embargo against Israel. It is time for an immediate and full boycott. Again, this will raise the specter of 1973. People will refer back to that when there was the embargo then, but we've been told repeatedly this is not 1973 in the global economy. Brent up 3%. A gold bid up on a haven status, up 1 1/8 at $1,944. A very good morning from New York.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to say, damn! Golly, this is a badass knife.
The top names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Krani in New York. Manish, we had shares of Bank of America jumping yesterday after the lender topped estimates in both trading and net interest income. It's been reaping the benefits of the Fed hiking rates. Bloomberg's David Weston spoke to the CEO, Brian Moynihan.
So let's think about two or three things there. One is just what are the consumers doing with the money they have in their accounts? And in a given year, we will have $4 trillion that will be spent by our consumers on debit card, credit card purchases, Zelle payments, checks written, money out of the ATMs, and all the different forms they spend it. That $4 trillion from in 21 to 22 grew at 9%. Year to date, for the first 4 or 5 months of the year, I would have been telling you in the second quarter, it's still growing strong at like 8%. It's now down to 4 to 5% in the year to date, and about 4.5% in the month of September, and in the month of October, consistent with that. The consumer has been slowing down their spending because interest rates take a toll, because as rates went up on their floating rate loans, their home equity loans, or other things that float, credit cards, or frankly, new car purchases, the rates are higher. Though there are mortgages getting done, those rates are higher. That slows down the restart of student loans. All those slow down their ability to spend on other things. They have to shift spending around. And on top of that, frankly, they're looking ahead, saying, hey, I hear things are going to be bouncing around a little bit. I'll spend a little less. And then the third thing is, they bought the goods they bought during COVID. They bought the new couch and stuff. They don't need to buy another one now. They've taken the trips, and now they're back into their core activity. And so as you put all that together, it's slowed by half. And what is spending rate at the year-over-year growth is consistent with 2% inflation and below 2% GDP growth. It is the same, that rate of 4% or so is what we had in 17, 18, and 19 as the economy kind of ended into an equilibrium. So frankly, the Fed has won the battle with the American consumer, and they're slowing down. And then the question is, what happens next? I can't predict, but this is a $4 trillion base, $300 to $400 billion a month. So think about it. It's hard to move around a lot. So once it slows this level, it's probably not going to kick right back up.
So Brian, how much of a vantage point do you have into where the consumer, the household stands? Because there was a lot of talk about essentially excess savings come out of the pandemic, because a lot of the checks that were being written to individuals and the dry powder, if you will, and drawing down on it. Do you have a sense of how much has been drawn down on it? And a second question is, to what extent is real wage increase maybe replacing some of that?
Well, that's the thing. So if you look, inflation's tough, especially on median income households in terms of goods and services. Goods are a harder part of what they buy. Groceries are a bigger number, gas prices are a bigger number, and it's very difficult. And that's what the pressure you see in some of the consumer sentiment. That's one issue. But if you look at it in a broad aggregate sense, what you see with this kind of spending rate is a consumer that's healthy. If you look in the accounts, especially in accounts median income $75,000 and under that had average balances before the pandemic, there's still multiples, but they're trickling down.
The Fed is winning the war with the consumer. The Bank of America CEO Brian Moynihan with Bloomberg. And joining us this morning is our senior bank analyst, Alison Williams. You're still alive after all those bank results. Good to see you. Listening to Moynihan, he talks about the Fed winning the war with the consumer. But you would say perhaps the underbelly of this lift in prices to do with the fact he's the only CEO that gave solid NII guidance. And NII was good for them, 4.5%, 14.4 billion, way over what the market had estimated. So they're doing well on NII.
They are, and I think it's going to be interesting to see over the next few days what comes from the regional banks. So the big banks that I cover, Bank of America, Wells Fargo, JP Morgan, Citigroup, all beat on net interest income, guided up for this year. As you said, Bank of America was the only bank that gave a line of sight to 2024. And so we really think that's a signal of confidence. Of course, the consumer is slowing, as he talked about. The one thing that investors are watching is credit. Credit was better than expected in the quarter. So again, the numbers coming in really good for the quarter. The question is, what's ahead, right? Because we only care about the earnings in so much as they tell us what's ahead. And when we look at the interest rate environment, we've had that big jump in rates, and I think investors are watching the rate side and the credit side as we go into next year.
Now, so when it came to Goldman's earnings, one headline that came out of that is that they're marking down their office exposure by 50% this year. In their alts asset management business, that real estate, just a lot of pain there. They've already, of course, changed their model to move away from their own balance sheet, just manage third-party capital. But I can't even imagine, given what valuations look like, that fundraising is easy in this environment. How does Goldman solve a problem like their real estate portfolio?
So they did actually raise about $15 billion gross in alternatives in the quarter. Keep in mind, alternatives is broad, and so you are, as you point out, seeing these markdowns in real estate. But I would say for Goldman specifically, we've had two very messy quarters, but we think that they're really setting themselves up well for next year and for the long term. If we look at their businesses, it's really the core institutional trading and fee business, as well as asset management, where we think they have a competitive advantage. And we think it's good that they're getting out of all these other businesses. They had a lot of hits this quarter, about $1 billion pre-tax. Last quarter was about $1.5 billion. That includes some of the markdown to their investments. But their overall alternative strategies of raising money from the outside, using that expertise, but not necessarily using their balance sheet, I think bodes well for the future. They're still seeing the hits from the past strategy, but I think positioning well for the future.
It's interesting that on comp, I'm looking at you identified trading revenue and banking fees were up 11%. So of course that's perhaps the belly of the angst, if you allow me the latitude of that, the angst against what Solomon was doing as strategy. But look at the comp. Show me the money. They've upped the comp, haven't they? $690 million. So they're ahead of 2022. Policy of appeasement in the payments, isn't it?
There are, and I think that this is.
Or am I just being very skeptical?
I don't think you're being skeptical. I think that one of the big surprises in the quarter also was the resilience of that trading revenue. Yeah. So when we looked at Goldman Sachs, and we'll see what happens with Morgan Stanley today, a year ago they really just blew it out of the park, and so even so, Goldman Sachs was able to keep their trading relatively resilient. We'll see what happens with Morgan Stanley. So that's delivering. On the investment banking side of things, we're seeing signs of life. So I see your face because you're thinking about how weak some of those fees were. But the fact that we're bottoming.
I've been through a few cycles, to be fair.
Correct. And so you also know to look at the backlog. We've seen the backlog coming down a little bit, but that's because they're executing. So we do see some signs of life on that side of things.
Manus just has long said he wants to be reincarnated as a junior investment banker. So these lines, if anything, are just bad news. He's just going to wish for that more. Look, Alison, you mentioned we're going to get some results from Morgan Stanley. We'll see whether they keep up in that regard. But I want to know about succession plans for Gorman. Are we likely to get any more details on that
you
in
and
this
everybody
earnings?
else wants to know, but I think we're not going to get details. I mean, it's sort of interesting, the strategy that they put forward to sort of name the candidates or point to the candidates and give a very specific timeline. So we will see. I think there's What's interesting, obviously, is that there's a plausible case for each of the candidates in terms of the institutional candidate generally rising to the top, but yet the business, Morgan Stanley really is all about wealth and asset management, and they've done so well on those fronts. And so we talked a little bit about the trading, but for Morgan Stanley, what we're going to be looking for is really flows. They have really showed tremendous momentum coming into this year. Gorman has set forth a goal of $1 trillion, so he set forth some pretty aggressive goals for his next successor. And but they're on track to do about a third of that, so $1 trillion in 3 years in net new assets. They're on track to do about a third of that this year, which would be in line. And so we'll see. We do expect some slowing, but we expect to see some strength.
All right, Allison, thank you very much. Good luck for the next set of earnings to come today. Allison Williams of Bloomberg Intelligence. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. When it comes to these markets, you are looking at oil spiking off the back of a headline of the Iran foreign minister calling for an oil embargo. The head-scratcher here, though, is yields higher, risk down, but the dollar still not bid. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg.
Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Let's get you set up for your trading day with a look at what's ahead. Big bank earnings wrap up. Morgan Stanley will report before the opening bell. We'll also get Tesla and Netflix. They'll report after the market close. And it's a big day of Fed speak. We have Waller, Williams, Bowman, Barkin, Harker, and Cook. They're all on deck. Plus, we're going to be getting the Fed Beige Book at 2 p.m. Eastern. U.S. housing starts and building permits. That data will come at 8:30 a.m. And another round of House Speaker vote that is scheduled for 11 a.m. Manus.
Okay, we've got some eyes down on the earnings sheet. We've just talked about banks with Alison. Morgan Stanley, their earnings will hit the tape before the bell. Tesla and Netflix, it's going to be interesting to see. Third quarter for Tesla, just how much have those price cuts? We've done them several times, Danny. We're looking for a gross margin of 19% to come in on Tesla, and they will, of course, come after the market close. And you've got Netflix as well. Are you sharing your password on Netflix? That's the question that I have for you. This is your truth and reconciliation moment to the CEO.
I am.
Whoa.
I am, and it makes me feel like a child. Like I'm too old to be on my parents' Netflix plan. But you know, at Netflix, maybe they'll push this ad-supported plan on me. I know that's going to be the concentration for this earnings plan. But do you, Manus Cranny, have your own Netflix account?
I have my own Netflix account, and I may be guilty, perhaps, possibly, of sharing the password with somebody. But that will all come to an end now that I've moved.
Not with me.
No, not with you. Let's just reset. I mean, we've been speaking for 55 minutes, and in those 55 minutes, there's been some quite significant shifts. Biden is in Israel, and of course, the oil market has really moved on the Iranian foreign minister calls. Danny.
Yeah, the Iranian foreign minister calling for an embargo of oil on Israel. You can see it popped higher. It goes above 3%. It's on the very far side of your screen there. But, Manus, you look at this overall market. Okay, you have oil moving higher on geopolitical angst.
Yep.
Risk is selling off. Yields are still popping higher. The dollar is just frozen in time. We're not getting that haven bid you usually would expect.
Yeah, I mean, the positioning is very, very long. We're trying to sort of, it depends what context you want to put around it. Speaking to one FX strategist at the moment on IB, he just said, well, it's off smalls, but, it's not exactly a huge move. Oil is the mover, as growth is not so bad in China at 4.9%. Novak says it's too early to talk about what to do at the November meeting. That's it for Bloomberg Brief. Surveillance is right ahead.
Quite curious about why citizens' assemblies actually work. I mean, what is it about them that taps into this collective intelligence and this desire to find a consensus?
One, I think, is because they bring together this diverse group of people that in the best case scenario is actually descriptively representative of the larger population. You maximize what I call the cognitive diversity of the group. You bring poor people, you bring minorities, you bring a lot more women, you bring a lot more, young people. And these perspectives are currently lacking in our parliament. So when you bring that, the richness of perspectives and information that you get is much higher. It's really focused on, okay, we're in it together. We have a problem to solve. How do we solve it?
But you must get show-offs at these.
Oh, you do? Of course you do. But the difference is that they're not rewarded for that behavior the way
a
they are.
politician is rewarded.
On the contrary, it's very interesting because you do have all the human types. So you have the politicians type in those groups. But it doesn't work. You do have also natural leaders that are actually very much respected. They have an influence. Their voice, really carries a lot of weight. But that doesn't mean that they're above the others. The only thing that gives you more weight is if you have a better argument or a better information.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
The resilience, I think, has taken a lot of us by surprise.
We are seeing the drag from higher prices weighing on consumers' ability to spend as we move forward.
We've read far too much into recent Fed speak that implied that these higher rates might have actually done some of the heavy lifting.
Is the long end doing some of the Fed's work for them? Absolutely, but that's proving not to be enough.
It kind of feels like we're in a sort of everything everywhere all at once market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Our top story this morning, President Biden touching down in Israel. His trip unraveling before it even started. A single blast at a hospital in Gaza killing hundreds. Israel is blaming Hamas. Hamas is blaming Israel. Tensions already at boiling point across the region. The explosion threatening to tip things further over the edge. The president says he's outraged.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there who are not sure. So we've got to overcome a lot of things.
The stakes for this trip could not be higher. How do you prevent the conflict from spreading? How do you ensure aid gets into Gaza and civilians are kept out of harm's way? Our team coverage begins right now with Bloomberg's Ollie Crook in Tel Aviv. Good morning, Ollie.
Hey, John. Yes, President Biden has arrived here in Tel Aviv. He was greeted on the tarmac by Benjamin Netanyahu, who said the only thing better than having a friend like you is having a friend like you here right now. And again, this is a very different trip than Biden had planned to do 24 hours ago. This was a two-legged trip originally, first stop in Tel Aviv, second stop in Jordan to deal with the sort of diplomatic side of it. And really the question is, what can Biden achieve here? Yes, he can show support for the Israelis, as every other official has done from the United States that has been here, as Chuck Schumer was in this very building a few days ago. Yes, there is the deterrence factor with the aircraft fleets and 2,000 soldiers, we understand, on high alert. But the third bit, and probably the most crucial part of this trip, the diplomatic side, has been completely scuppered by the explosion in this hospital in northern Gaza, in Gaza City. And there was supposed to be that meeting with El-Sisi, the Egyptian president, the king of Jordan, and as well Mahmoud Abbas, and that has been completely torn to pieces.
What are the ramifications, Oliver, for the president and for the American contingent that the Arab part of the trip is canceled?
I think it's huge, Tom. I mean, you saw the protest pictures across the world hours after this happened in Gaza, protests in Lebanon, in Jordan, in the West Bank. The fact that the rest of the Arab world is incensed about this. And even though President Biden, as we heard in the introduction, considers from what he has seen that this was not an Israeli operation or a fact that has not yet been totally clarified, this is another 500 people dead in a hospital that has been overburdened. And for many people in the region, that is not really going to be the sticking point. That is a bit of nuance that is perhaps not really in the front of their minds.
Oliver, we're hearing that Iran is calling for an oil embargo against Israel based on what we saw, the explosion at the hospital. I am curious how much this is percolating out, how big the risk is based on the people you speak to, and more of a risk is there of some sort of escalation in the region?
I think it's only gotten greater since what happened last night. Again, it's the shutting down of that diplomatic channel and those conversations that would have been absolutely key. And again, what can Biden achieve here? Potentially, again, this is a bit of speculation, but maybe getting some of that aid moving from the southern border of Gaza with Egypt at Rafah, getting that into Gaza to pull some of the relief a little bit would be a sort of diplomatic step forward. But apart from that, it's very hard to see. And we're going to be watching for the president's press conference in just a little bit of time after he's met with the Israeli leadership. But we understand also some of the victims that encountered the attacks in southern Israel. And so we'll be watching for that press conference in about, we don't know exactly what time. And it's a very fluid schedule. But we're going to have to see what line Biden walks.
Ollie, I want to pick up on something that you suggested in the last minute or so. Israel working to allow civilians to leave through the Rafah crossing out of Gaza into Egypt. It was unclear yesterday whether that's all civilians or foreign nationals. Ollie, have you got any clarity on that whatsoever this morning?
So the focus is going to be on foreign nationals. I think that there is this huge question of refugees, and this is completely, this for Egypt has said basically is a non-starter. The Jordanians have said this is a red line. We will not take refugees. So this is going to be another part of this very complicated puzzle. And the question is, yes, on the one hand, it's overburdening these societies that maybe cannot take a huge injection of refugees. But again, this is at the very heart of this issue. It is seen as relinquishing territory and moving people from their homes into another country. That is just not acceptable for many of these leaders.
However, does the president have an agenda or a White House schedule where we know when he leaves? Is this a structured trip as usual, or are they making it up as they go?
We certainly get the sense that they're making it up a little bit as they go. Again, this was going to be a much larger and longer trip that had this Jordanian component that now is evaporated. We do not expect the president to stay overnight in the region. But again, as we've seen with Antony Blinken and all of his movements over the last 5 or 6 days, this schedule has moved and has been very fluid throughout this. Olaf Scholz was here yesterday. He went to Egypt himself to try to do some of that diplomacy. Again, we do not have that expectation, but I would say that everything is on the table.
Ollie, let's talk about the military deterrence. There's a growing presence in the Eastern Mediterranean now. Can you walk us through what we heard yesterday about the kinds of numbers that the US has got on standby?
So what we've heard is 2,000 troops that are on high alert. And again, we have 2 carrier groups in the Eastern Mediterranean, which are, some of the biggest carriers that the U.S. has to offer. So again, in terms of deterrence, this is going to be absolutely huge. But again, it's going to be providing military aid to Israel. As we hear every single day, you hear the Iron Dome going and taking rockets out of the sky. That has a limited supply of ammunition. We know that the U.S. has given some of their own stockpiles back to Israel. But there's also this question of Hezbollah. If they do get involved, they have an unknown number of thousands and thousands of rockets stationed in southern Lebanon, deep underground. They could also, if they fire many of them at once, could overwhelm the system. So again, this is the great fear of escalation here in Israel. And again, this is the situation that is made infinitely more complicated by the explosion in the hospital yesterday.
Ollie, thanks for being with us, sir. Ollie Crook on the ground in Tel Aviv. The President of the United States could well be speaking in the next several hours or so. A quite shocking incident in the last 24 hours. The back and forth, trading accusations, Hamas blaming Israel, Israel pointing to a video of what its military said was a malfunctioning rocket shot by Palestinian militants. The pressure that will be on Israel now, Tom, to provide evidence for what they're suggesting in the last 24 hours is going to be absolutely immense.
Ira Duffner's been policing this, and by policing, I mean the language, the rumors, the speculation. And what's interesting to me today, John, X number of days into this, is the phrase Islamic Jihad has entered the discussion this morning. I'm not sure that was there 3 or 4 days ago for most of us.
Well, this is sort of this question around how many proxy agents are there in the region that are being funded by Iran and that are connected, and that they are different factions. There is a sort of feeling that there are more people involved. Question that I have is, what is the trigger point for something that really is going to spiral into a new frame of mind? And you are seeing that a little bit, the fears of that this morning.
Really unsettling this morning. Getting reports from AFP. Thank you to our team over in Brussels. Maria Tadao sending this one over. 6 airports in France, Tom, evacuated after attack threats.
I think across continental Europe, of course, closer to Israel, this is going to be a theme here. And let's not kid ourselves. This is in the United States as well. Maybe it's hidden. Maybe it's out of picture. But I think all intelligence communities of every persuasion are hyper-focused this morning. It's folding into the markets as well. I'm looking at the screen, John, and with the president in Tel Aviv, there's a new tension on the Bloomberg screen.
Equity's a little bit softer. We're down 1/3 here. If you want to find the tension in the commodity market, through the 90s on Brent, 92.42, up by 2.8%. WTI crude, 89.23, up 3 percentage points. With us now is Ben Laidler, global market strategist at eToro. Ben, deeply disturbing pictures in the last 24 hours, for that matter, for much of the last 10 days. Ben, when you look at the market, there is a belief that maybe this can remain localized. It's something that perhaps investors can try to ignore. Ben, is that the wrong approach to this situation?
Yeah, this is obviously a terrible human tragedy. And from a market perspective, anytime you see rising economic and geopolitical uncertainty, which is what we're seeing now, that is bad for markets. It saps investor confidence. It saps company confidence, and we're just bad at pricing it. And it's coming at, on top of that, a vulnerable time where a flux on the earnings cycle, a flux on the economic cycle, a flux on the interest rate cycle. So all that, I think, is ingredients of worry here. The only non-negative thing I can say about this is these high levels of uncertainty have unfortunately become a new normal over the last few years, whether it's the Ukraine invasion, whether it's the dramatic backup in inflation and interest rates that we've all endured over the last couple of years. So I think the market reaction you're seeing, whether it's stocks not selling off hard or whether it's haven assets not rallying maybe as much as people think, is unfortunately we've just got used to these very high levels of uncertainty in the last few years.
So are you saying, Ben, that because people have gotten used to high levels of uncertainty, there isn't going to be a big asset repricing as a response?
I think that's the scenario that's played out so far. I'm not the geopolitical analyst. Obviously, there's huge flux, huge uncertainty. Things could, easily get worse here. But I think that explains the situation so far. I guess the one thing I would just say, oil is the key worry point here amongst the sort of assets we look at. And I just a little bit of context here. This is not the 1970s. Our economies are 60, 70% less energy intensive now than they were back then. Gasoline's 3% of the inflation basket, 4% of the stock market. It's a big deal. I'm worried about it, but I do think it ultimately self-corrects. Right, every dollar you go over $90, I think, is everyone's trying to use less oil. And I think our economies are just different now than they were 20, 30 years ago.
That said, Goldman Sachs came out overnight basically saying that markets are not accurately pricing some of the risk out there. A team at Goldman Sachs saying a prolonged period of geopolitical uncertainty coupled with still inflationary macro environment is likely to eventually trigger growth concerns. On the margins, are you taking off some risk in light of just the heightened risk scenario that we have on the table right now?
I think we're in an environment where you need to be invested, but you need to be reasonably cautious. Geopolitical risks are rising, and that's not good. $90 oil, bond yields where they are, none of that's good. Ultimately, though, I do think we should be focusing on the bigger picture, which I think remains reasonably constructive. The interest rate cycle is coming to an end. Inflation is easing. I think economies are going to start are almost as good as they're going to get. And I think the earnings cycle is troughing, and I think you're going to get some sort of technical tailwinds, if you like, from seasonality and investors who are already very cautious. And I think that's the other ingredient here as to why markets haven't reacted, more negatively. Is investors have had 3 to 4 months here to take risk off over the summer. And I think and you've seen quite a lot of that.
Hey, Ben, good to catch up. Ben Lader there of eToro, constructive on this market. We've talked about this a few times over the last 2 weeks. The challenge of processing seemingly two opposing thoughts simultaneously. You can have a bank CEO turn around and tell you it's the most dangerous the world has been in decades, and the very same bank CEO, Bramo, can boost their guidance and deliver better numbers. That's the challenge for investors looking at this situation currently.
And this idea that the emotion of the moment is incoherent with the cold-hearted nature of markets that are trying to game out probabilities. The problem is when you do have a level just hanging over your head for a prolonged period of time, where you have such explosive types of scenarios in a really key region, it takes its toll. And that's what I'm starting to hear from a certain number of notes, whether it's Goldman Sachs strategists, whether it's also what we're hearing out of Bank of America. So these are some of the things that I'm watching. It's hard to just ignore it.
We'll talk more about that Goldman note a little bit later in the hour. Looking at this market right now, this bond market, absolutely punishing. We were told that yields at the front end were pinned, and then they weren't. On a 2-year, up by 11 basis points yesterday, through 520. Right now, your 10-year yield, 482.80. The story continues. Leslie Vinja-Murray of Chatham House coming up next from New York City. Good morning.
Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
Haley, everything has changed. One could make the argument that the president was going with a significant amount of political and moral capital for having taken a very unambiguous stand on the question of terrorism and Israel's right to defend itself. In preparing for this trip now, you have the backdrop of a horrific event at the hospital in Gaza. The trading of blame doesn't change the fact that hundreds of people have been killed.
That was Daniel Kurter there, the former US ambassador to Israel on balance of power. Arguably the most difficult trip the President of the United States has been on in its tenure in the White House. The blame game continues. Hamas is blaming Israel. Israel is blaming the other side. This line from Israel Defense Forces: a failed rocket launch by the Islamic Jihad terrorist organization hit a hospital in Gaza City. IAF footage from the area around the hospital before and after the failed rocket launch by the Islamic Jihad terrorist organization that was posted on Twitter, on X, formerly known as Twitter. Lisa, the pressure to work out what has happened here and the intensity of this trip, I cannot really convey how difficult this moment is for the president. It was hard enough to begin with 24 hours ago. It's that much harder now.
Especially with the protests that have been percolating out in the region and beyond. The scenes from Beirut last night were pretty dramatic. There is also a question about whether the stances of Egypt and Saudi Arabia are shifting based on statements that they put out, very much taking a side and saying and blaming Israel for this. So it raises the specter of how much harder it's going to be for President Biden to get some sort of ceasefire and agreement when the lines are hardening in the wake of such emotion.
I just can't go to a ceasefire yet. I think we're miles and miles away from that based on what the Israeli military is going to decide to do, to choose to do here, perhaps when the president leaves and beyond. But I see a lot of diplomacy going on right now, John, and not enough talk about the military as we did yesterday with James Stavridis.
Well, the headline, Tom, is the diplomacy that's not taking place in the next 24 hours. Initially, this was supposed to be a two-part trip.
Yeah.
One part Israel, second part in Jordan. Almost immediately in the hours after that blast, King Abdullah, Abbas, al-Sisi of Egypt, all cancelling that trip. That was a key part of the reason, the objective of making this trip to begin with.
For most of our Americans not familiar with this geography, the West Bank is actually to the east. It's the West Bank of the Jordan River. And John, what's so important here is the analysis of Israel is about what should have happened, of course, what is happening, what should happen forward. And it centers around this West Bank, and that's buttressed up against Jordan.
If you are just joining us, welcome to the program. I'll just set the tone for the markets currently. Negative by a third of 1%. No drama in the equity market on the S&P 500. Plenty of drama in the bond market yesterday. Yields up by 11 basis points at the front end through 520 rather on a 2-year. Right now about 518. At the moment 482.80 on a 10-year. Yields down by a single basis point or so. We do have a rally in crude. WTI is getting closer and closer to 90. 89.24 on WTI. Brent crude, Tom, 92.50.
I want to point out, John, very importantly, and this is for the sophisticates out there, Euro Swissy. Swissy again goes through 0.95, which shows strong Swiss franc, and that is really a tea leaf of the tension that is out there. Joining us now, someone quite known at Chatham House for clarity of thought, Leslie Vinja-Murray is head of U.S. and America's program in London with a truly global view. Leslie, I have to go to one of your recent essays. Everyone in your world is writing, thinking, looking back, looking forward. You look back in one of your essays and say America went off the watch in the Levant. What did we do wrong?
I think that there was a sense that with the withdrawal from Afghanistan, as tough as that was, that America could really focus its priorities very clearly, very strategically on China. That was, first checked by Russia's invasion of Ukraine that brought America squarely back into the Euro-Atlantic and with full force through NATO, really working to support Ukraine. But there was a hope, and there's been a hope for a long time. There was a belief that this was a president who had finally executed on that intention of so many American presidents to really reduce America's footprint in the Middle East and to focus on those strategic priorities. And number one was China. And this has just shown in spades that America is an essential power. You know, we've had China at its 10-year anniversary of the Belt and Road Initiative talking about economics and economic diplomacy, completely silent on the question of the war. So I think it's very clear with President Biden's trip and this ongoing diplomacy, this is very difficult for the U.S. Perceptions across the Middle East of America's power in the present and in the past are very complicated, but it certainly demonstrates that the U.S. needs to stay engaged.
We're just talking here about the military exercise we believe to come. We don't have reports of that yet, really, folks. But Leslie Vincimari, to borrow from Fareed Zakaria, in a post-American world, what does a post-Hamas world look like?
It's very difficult right now to imagine a post-Hamas world. I think that is certainly an objective. As you've said, and I noticed your comments earlier, we're very far off a ceasefire. It's widely expected that when President Biden leaves the region, there will be a ground invasion. That is going to be very difficult in a context of urban warfare, but that objective is to root out Hamas. We are looking probably at a devastating loss of life for Palestinians on the ground, and there is no good alternative. And this is the real challenge. We know that that Fatah has not demonstrated an ability to govern. There can't be a vacuum. Israel can't take over Gaza. There's nowhere for the Palestinians to go, and the problem now is who governs in Gaza if and when this crisis, this war is brought to a close. That's a very long ways off right now, but that is where the strategic priority has got to be.
Leslie, how much more difficult is it to get to some sort of agreement in the Middle East, some sort of diplomacy for President Biden based on some of the rhetoric out of the governments of Egypt, of Saudi Arabia, nations that previously might have been more amenable to working with President Biden?
Well, this is clearly the great tragedy. There was that push to really put together an agreement, a relationship between Saudi and Israel. Now governments across the region are going to be contending with public pressure, grievance for Palestinians who will be and have been killed. And that just makes it much more difficult, not only to engage on this question of a ceasefire, of putting together some sort of regional peace initiative, but to be seen to be doing this in the context of a massive loss of civilian life. And this is why we're seeing President Biden in public, behind the scenes, working back channels. There's an effort to get some sort of resolution tabled at the UN Security Council, but really a really strong push and an uphill battle right now to have humanitarian corridors, talks of safe zones in Gaza, trying to get humanitarian aid through. There's been a push to get that Rafah crossing open. These are all tremendously difficult things to achieve, even in the best of circumstances. This is very far off the best of circumstances.
Particularly unnerving yesterday evening, Leslie, to see the protests erupt across the Middle East. In expected places, Lebanon, Tunisia, to see them erupt in NATO's Turkey. Leslie, can you talk to us about that relationship between Turkey and America currently?
This is a very difficult circle to square. Turkey is a vital partner to the United States. It's a member of NATO. But when you begin to talk about Israel and Palestine, the politics are just very different. America is clearly a supporter of Israel. That very close relationship has the effect of alienating people on the Palestinian side and making that prospect of bringing even some of America's closest partners on board to work for what will be vital now. But again, as Tom said, we are so far off that prospect for peace. The question now is, can there even be a significant effort to protect civilians, which is what the president is trying to articulate, what many people are trying to call for. But it looks it looks very difficult in the current context.
Leslie Vinjer-Murray of Chatham House.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're
in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Equities doing okay this week. Up on Monday, on Tuesday, just about unchanged on the S&P 500. This morning, we looked like this on equities. We're negative 0.4% on the S&P. We're down 0.5 on the NASDAQ. We're doing okay, even in the face of this in the bond market. Another big day in the bond market yesterday. This bond market, I said it before, I say it again, absolutely punishing. You get comfortable with the front end of the curve. You start saying things like, we're pinned here. The Fed's not going to go anymore. They're out of the game. Then the data brings you back in. Yields are lower by 3 basis points today, up big time in yesterday's session through 520. This morning, Bramo 517.76.
Megan Graper yesterday nailed it, I thought, of Barclays, where she basically said people might be misinterpreting this idea that the longer end of the curve is doing the Fed's work for them. Maybe it's indicative of stronger than expected economic data that will require the Fed to do more. And yesterday, that was the tone that we felt certainly at the front end.
Justin Wolfers, who we visited with in Jackson Hole, had a blistering note out this morning, John, and I'm paraphrasing to use the Australian. He's looking for a big figure GDP. And that's been just simply, keep it simple. We've got a huge geopolitical crisis on our hands. You know what? We've all got wrong. The recession call.
I know, the US consumer. We led with it yesterday. The economists decried recession. That recession just hasn't happened yet, and they're still crying recession, and people have stopped believing it based on the price action we saw yesterday in the bond market. 10-year currently, 480 to 80. Yields just about unchanged there on the 10-year. Just to turn to foreign exchange, we'll finish on the euro for you. The euro against the dollar shaping up as follows in the currency market. 105.57. That currency pair negative 0.2%. A quick look at crude, a rally up by 3% on Brent to 92.62. On WTI, up 3% to very close to 90, 89.40 right now on WTI crude. Under surveillance this morning, President Biden touching down in Israel just hours after an explosion at a hospital in Gaza killed hundreds and left the conflict at a delicate point. Hamas blaming Israel, Israel blaming the other side. Saudi Arabia, Turkey and others condemning Israel. Biden, Lisa, saying he's outraged.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there who are not sure. So we've got to overcome a lot of things.
Lisa, it's the other side.
This is an incredibly tricky moment. And I have to say, last night was an indictment of how quickly information moves and how quickly social media takes it to another side before there's anything conclusive. My question really is going to be, how much further does this push away President Biden from the leaders of Saudi Arabia, of Egypt, of Qatar, that were on the front lines of trying to come to some sort of agreement, some sort of working relationship, and it seems like those fissures have only gotten wider overnight. And this, to me, is the big threat. It is a powder keg. I keep saying that, of emotion, and you can see that in real time last night and this morning.
Yeah, but I'm going to say that all of that is true, but these were first conversations with people with a legacy of dealing with the Palestine Authority or the three shades of Palestine that there is. I think one of the great problems here is we always frame out back to biblical times that a war is going to be short. And I don't think, can we put a timeline on the military exercise of Israel now in the Gaza Strip towards the West Bank and up towards Lebanon and Hezbollah? I'm not willing to put a timeline on it. And the diplomacy, to Lisa's good point, is out front, verbal, visible, but I'm not sure what the efficacy is other than that thing of diplomacy, John, to just keep talking.
Duration, breadth, I've got no idea.
No idea.
Absolutely no idea. I don't think anyone does right now either. Another vote due this morning as the wait for a new House Speaker drags on. 20 GOP holdouts withholding their support for Jim Jordan, the Trump-backed ultra-conservative. Another vote scheduled for 11 a.m. Eastern this morning, but some Republicans already suggesting Jordan's campaign is heading in the wrong direction. Shout out to Terry Haynes of Pangea. Terry Haynes, 2 Mondays ago, basically just turned around and said, anyone who thinks the odds of selecting a speaker have just gone up because of problems abroad, they're wrong.
What I think is going to be really interesting is at 11 a.m. today, what happens if Jim Jordan gets fewer yes votes than he got yesterday, right? I mean, this is actually a very real possibility because a number of representatives who voted for him yesterday have said they're going to switch their vote to no. Talking about dysfunction, who's next? Who is even on the table as a potential successor to want to put their name up to be pilloried and shot down? I mean, that's essentially what you're trying to do.
The centrist Republican who, name escapes me right now, I'm so sorry for that, I'm supposed to remember this stuff, just basically said he can't fathom the gentleman from Ohio trying to find a middle ground with Republicans or a middle ground with the House of Representatives under some form of domestic or international crisis. I thought that was a nuance of, like, why is this happening, particularly for our international audience?
So there's two stories here. Escalation abroad, dysfunction at home. And I think this third story speaks to both. Escalation abroad, dysfunction at home, and we've got a bond market issue, a major bond market issue. Treasuries yesterday absolutely tumbling. 2-year yields, 17-year highs, following that jump in retail sales, leading to increased speculation all over again that this Fed might have to come back into the game. Year to date, remember the start of the year, this was meant to be the year of the bond. The year of the bond, Brammer, we talked about it repeatedly.
That worked out.
2-year, up 75 basis points this year. 10-year, up almost 100 basis points. 30-year, up 98 basis points this year.
Something that Priya Misra of JP Morgan and Stephen Major of HSBC said that really is kind of haunting me, which is there are a lot of people who believe in the bond story and yet they're being forced to sell on the margins as people realize some of these losses, as people diversify. What happens if you get actual withdrawals in response to some of these losses from the bond portfolios, and suddenly people who even believe in long-term yields going lower are forced to sell into weakness amid a buyer's strike? Are we seeing that right now in market action that is incredibly jumpy and jumpy to the upside?
I'm with you. The president says we can afford it. Treasury Secretary Janet Yellen says we can afford it. It's getting more expensive based on the moves we've seen over the last few months.
The Bloomberg Total Return Index, the one I follow, the street follows, is only 1.4% down in price, John, to get to the low of the autumn of last year. On a real basis, we're already way beneath that because of high inflation. What I would point out, I went to the Bankrate website and I really looked, and you've got 7.9x% mortgages, and the refinance rate for housing is now over 8%.
Wow.
Yeah, wow was my response. We're very sophisticated about that.
That's all I've got for that. Wow. It's just a wow number, isn't it? It's massive.
We're
so
back,
expensive.
You know, we're going to get to our good guest here, but we are back, John. Forget about the 06, 07 analysis. You can take this back pre-Volcker, back in the
We were doing this with
60s.
Shanali yesterday, Tom. Go through the Bank of America earnings and look at some of the origination of loans, mortgages, all of that stuff.
Right.
And look at the credit rating of the average borrower now. They're lending to people with super, super high credit ratings. Never mind paying up for it, being able to afford that price. Can you get access to that price to begin with?
Well, access to capital, and that's when I say the Wayland silence, that's precisely what we're talking about, is where there's a silence to those of a more mortal credit. What we're going to do now is go to Jennifer McCown, Chief Global Economist at Capital Economics. We thank you for being with us on radio and television. We are watching with Oliver Crook in Tel Aviv, news flow from Tel Aviv, and we'll give you a complete report on that as we see it in the coming minutes. Jennifer, there is a geopolitical crisis. How does it affect your economics? How have you adapted your Excel spreadsheets to a war in the Eastern Mediterranean?
Well, it's very difficult, isn't it, to incorporate these kinds of events into economic forecasts, not least given the uncertainty about the extent to which this might escalate, concerns around commodity prices. But those are the things that we're considering, really. We've not changed our commodity price forecast at the moment. We'd already expected oil prices, gas prices to remain relatively high out to the end of the year. But there are certainly risks around that we're very much focused on, and the potential implications for inflation elsewhere.
Brent crude, folks, up 3%, 92.69, nicely above 92 right now. Jennifer, I noticed a statistic. John Farrow mentioned it to me, and he's looking at his Kensington real estate, and that is 6.7% inflation in the United Kingdom. Are other central banks going to see those kind of statistics where they have to go longer or even, dare I say, higher because of persistent inflation?
Well, yeah, that's a real concern for the UK, and a bit of a disappointment, that 6.7% rate. I guess the encouraging point from the UK's perspective is that the labour market does seem to be loosening a bit, and that's really been the key for the UK, the extreme strength of wage growth, which now does seem to be coming off a bit. For other central banks, the Fed, the ECB, inflation's not so high. Core rates are clearly coming down, particularly if you exclude shelter in the US case, so less cause for concern in those economies, I think. And a big point to note is that so far as central banks are concerned, the rise in bond yields that we've seen is doing some of their work for them. So if anything, that would maybe make them less inclined to hike further.
Jennifer, to that point, this idea of higher borrowing costs around the globe, how much does that really strain the ability of governments to be able to keep borrowing in the face of growing geopolitical tension, akin to what some people are saying is the worst going back 50 years? The U.S. is talking about possibly a $10 billion package for both Ukraine and Israel. Is that plausible without another leg higher in borrowing costs?
Well, the current policy plans, yes, I think are plausible because they're already priced in to the market to some extent. But certainly, the high levels of borrowing costs are going to limit government's ability to provide further support. We're certainly expecting in the future for them to have to consolidate to some extent and rein in their borrowing.
Right now, what are you looking at? Basically get a sense of just how closely tied the global outlook is to some of these risks. And I ask this because we have Bloomberg Economics coming out and saying that if oil prices surge to $150 a barrel, that you could see the global economy tipped into recession. How much are you adjusting some of your parameters in light of the recent developments?
Well, as I said, we'd already expected oil prices to remain relatively high out to the end of this year, gas as well, but we're keeping a very close eye on the situation, whether it escalates. And I think that's what you'd need to see for those kinds of $150 per barrel numbers that you're talking about. We'd need to see some escalation to broader parts of the region, to elsewhere in the Middle East, to see those kinds of high levels. And yes, if that were to happen, then we would need to revise up our inflation forecast significantly. It may be that central banks in developed markets would need to hike further for fears that this starts to affect core inflation, and then, yeah, recession risk clearly intensify at that point.
Jennifer, one final question too quickly here, I should say. What we have new is an inflation-adjusted yield that's tangible, a tangible real yield. How does a tangible real yield fold into your GDP forecast for any given nation on the consumption side, and particularly on the business investment side?
Well, what we're looking at really is the pass-through of these yields into effective borrowing costs. We know that the pass-through has been relatively slow, partly because of a shift to more longer-term debt, particularly in mortgage markets in the developed economies. So the effects of the policy tightening that we've already felt have not been felt by the average households in particular, and firms too. So we're looking at the extent to which that is passing through in future. We've seen financial conditions tighten pretty dramatically and lending come off, new lending, and effective interest rates are now starting to rise. We think maybe we're about half of the way through feeling the effect of the policy tightening that's come. So we're looking at the remaining half and the extent to which that starts to really hit consumer spending, for example.
Jennifer, thanks for being with us today. Jennifer McKeown there of Capital Economics. Story worth monitoring. Just another headline crossing a Bloomberg for you. This comes from Le Soir, which is a French-language Belgian daily newspaper. The headline reads that the airport Ostend in Belgium evacuated after a bomb threat. Unfortunately, Tom, we've seen several of these headlines over the past few days.
Well, we have. In Belgium, of course, is a tinderbox of Europe in terms of terrorism. I think that's widely understood. But it's part of where we are, and I'm quite confident, John, we'll start to see some of this in America as well. We're not, the ocean does not protect us this morning.
A super fluid situation on the ground in Israel this morning, where the President of the United States is, alongside the Israeli Prime Minister Benjamin Netanyahu. Any comments that come out of that meeting throughout this morning? If we get a briefing, we'll bring those headlines to you. Coming up shortly, Devin Ryan of JMP Securities on bank earnings. Morgan Stanley, the final bank out of the gate to wrap up earnings on Wall Street before our attention turns to tech after the closing bell, with Tesla and Netflix on deck. From New York City, futures down. This is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Frankly, the Fed has won the battle with the American consumer, and they're slowing down. And then the question is, what happens next? I can't predict, but this is a $4 trillion base, $300 to $400 billion a month. So think about it. It's hard to move around a lot. So once it slows this level, it's probably not going to kick right back up.
Really interesting interpretation of what's happening with the American consumer there from Brian Moynihan, the Bank of America CEO, speaking with Bloomberg's David Westin just yesterday. The retail numbers suggested the consumer boom continues. Brian Moynihan is talking about a slowdown of his clients, his customers. We talked about this yesterday, Lisa. Is Bank of America still the bank of Americans?
Based on the FICO scores that they have, no, I don't think so. I mean, they basically are perfect. There's also a larger question around him saying, yes, the consumer is slowing, but we talked about this yesterday. To what? He still said that spending, total spending, was up year over year from last year. So we are still dealing with elevated spending levels. Are we going back to just a higher or a lower high rather than just basically the normal numbers of the past?
Healthy, but slowing. Can we give a shout out to Barclays yesterday? Came on this program and basically said, perhaps this market's got it wrong, that if this data continues to surprise to the upside, the Fed might have to come back into the game. Based on the price action we saw yesterday following retail sales, I'd say Barclays had maybe, Tom, picked up on the scent of what was just around the corner.
I agree. There's a huge economic readjust off of the combination of the jobs report and what we saw yesterday with buoyant retail sales. And there's some people out there quibbling, saying seasonally adjusted. There's some challenges. But the fact is the markets are in charge, and the markets spoke with a vengeance yesterday. There's no other way about it. One thing I would point out as we go into Morgan Stanley analysis, John, and I've seen a number of market cap studies. The great unspoken here is how J.P. Morgan quietly, quarterly to quarterly, extends its lead. That's what's really not being talked about, is on a market cap basis. It's not fair to say it's them and everybody else, but the tendency's there, the trend is there.
I think the stock performance, outperformance, speaks for itself on that front. If you are just joining us for the price action, we're negative. Session lows actually by 0.5% on the S&P 500. Yields just about unchanged, 482.59. Getting really, really close to 90 on WTI, 89.25. We're positive there by about 3%. Plenty of bank earnings this morning, TK, including the regionals as well. Bancorp, First Horizon, and just moments ago.
Those are really important. The regionals are key, and as we heard from Thomas Schode of Keefe, Bruyette and Woods yesterday, the smaller banks making up 90% plus of the pie. Right now, though, the focus in New York on Morgan Stanley, Devin Ryan, Director of Financial Technology Research at Citizens JMP Securities, joins for a brief this morning. Why does Morgan Stanley have such a book value, price to book value differential over Goldman Sachs? What is the distinction, Devin?
Hey, Tom, good morning. It's really simple. It's the wealth management business. Typically, investment banks, particularly balance sheet investment banks, trade on book value, and wealth managers trade on earnings. And so Morgan Stanley has a much bigger wealth management business and investment management. So that's been a good story for them. I think today the big question, interestingly, is going to come back to what's going on with net interest income within wealth management, because that's been such a tailwind for Morgan Stanley. We might see that flip a little bit this quarter. So interestingly, that's where everyone's focused here.
But they're not Charles Schwab, right? I mean, their net interest income is a different NII from Schwab.
Different and similar. So it's driven by the customers in the wealth management unit that sweep cash over to Morgan Stanley's bank. Similar to Schwab, the difference is that Morgan Stanley on the asset side of their balance sheet has more of a floating rate dynamic. So that's been good. But the negative side has been that they are losing kind of some of that low cost deposit, and that's going to higher yielding options like money markets and CDs. And so that has been a little bit of a story, but Morgan Stanley has seen a huge tailwind to the tune of about $2 billion over the last couple of years, simply because interest rates have moved higher and they're earning more on the asset side of the equation than what they're losing on the liability side.
I usually don't go to the soap opera side of it, but Shonali Bassik insisted I ask this question. Is James Gorman going to make a succession announcement today?
I don't think it's coming today, or at least they haven't set us up for that, so I'd be surprised. But yeah, Gorman's done a fantastic job, and they have a deep bench, so we're pretty comfortable with the direction that it may go. But you have to give him a lot of credit for how he's navigated this company.
Devin, usually the regional banks are sort of a side note to the bank earnings, and this time I'm actually more interested in the regional banks than I am the big banks, which seems to be doing just fine and insulated for a whole host of reasons. So far this morning, we got data from Citizens Financial that showed that net interest income, net interest margins came in below expectations. Those shares are tumbling. How much are regional banks going to really tell the story as big banks cater to an increasingly select group of wealthy individuals?
Yeah, I think it's a great question. I think this all comes back just to what's going on with interest rates and the question of, is the Fed done or is the Fed still moving higher? And it's creating a lot of uncertainty with funding, with deposit bases. And to the extent, the Fed is done or interest rates eventually start to move back down, that'll be very settling for, the broader banking industry. To the extent rates are still moving higher, it continues to put that pressure on funding and ultimately, to your point, on net interest income. So that's where this push-pull is right now, and that's, we're all focused on it. The macro is much more relevant right now than, in a lot of cases, these individual companies, and that's driving the story.
Well, to build on that, how much did the big banks of Wall Street really tell the story that we're going to see in some of the smaller banks? How much is the divergence really clouding any kind of macro signal from big bank earnings that we used to get?
Yeah, well, again, I think the big banks have a pretty diverse business, and areas like wealth management at Morgan Stanley, or even trading at firms like Goldman that did incredibly well this quarter, are less of a story for more interest rate driven firms. And so, as rates remain kind of this big question mark, and to the extent we stay higher for longer, that creates some pressures. The flip side is that, in our opinion, a lot of that money that would have moved, the yield-seeking money out of the banking system or out of the brokerage system like Morgan Stanley, has already moved because rates have now been high for a sufficiently long period of time that if you had money that you were going to move, you likely would have moved it. So I think we're still dealing with the same issues we've been talking about for the last year, but I think they're less intense. The question is, do we have another step function higher in interest rates, which is, again, I know you guys were talking a little bit about that this morning, that becomes another potential risk. And you could take it on the other side and say, if we're stabilizing, then the whole system stabilizes. But the uncertainty for financials investors is the biggest thing that people are dealing with here. It's not healthy for financial investors.
Devin, very quickly here, everybody wants to do what Morgan Stanley's doing. I really never seen it in my life. Everybody wants to be in wealth management. But it's got to be some form of zero sum where only some selected people win. Who's losing right now?
Yeah, it's funny, Tom. There's about 300,000 financial advisors in the U.S. Today. There's about 300,000 financial advisors in the U.S. 20 years ago. So it's not this huge secular growth industry in terms of new advisors coming into the market. So it is really zero sum, as you mentioned. There's always, not to kind of pick on companies, there's always kind of net share losers, particularly some of the larger firms. I think Morgan Stanley's been a winner. And then, there's a big shift actually to independence. So financial advisors kind of leaving even some of the wirehouses and going and running their own book of business at a firm like LPL or Raymond James, or even custodying with firms like Schwab or Fidelity, which is why you've seen such tremendous growth at those types of firms. So there is a lot of movement going around, but it is zero sum. So Morgan Stanley's been a winner of the big firms. It's also a scale game. So firms are going to have a hard time getting into and breaking in because it's such a scale marketplace.
Hey, Devin, got to leave it there. Devin Ryan at JMP Securities going into numbers from Morgan Stanley in the next hour or so. Super fluid situation on the ground in Israel, where the President of the United States is meeting with Israeli Prime Minister Benjamin Netanyahu. Let's try and listen in and see if he answers any questions. closed-door meeting with Prime Minister Benjamin Netanyahu and the President of the United States set to commence any moment now. The President is in Israel. He will not be going to Jordan for the summit with Arab leaders, including Egypt, the Palestinian Authority, and Jordan as well. We were hoping, Tom, maybe for some comments from either leader.
The symbolism is shocking. I have to admit, I'm taken abruptly, folks. For those of you on Bloomberg Radio, here's the president, I believe, speaking. Let's listen in.
Israel seeks to minimize civilian casualties. Hamas seeks to maximize civilian casualties. Hamas wants to kill as many Israelis as possible and has no regard whatsoever to Palestinian lives. Every day, they perpetrate a double war crime, targeting our civilians while hiding behind their civilians, embedding themselves in the civilian population and using them as human shields. We've seen the cost of this.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Daybreak Europe. I'm Kriti Gupta. Let's look to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The resilience, I think, has taken a lot of us by surprise.
We are seeing the drag from higher prices weighing on consumers' ability to spend as we move forward.
We've read far too much into recent Fed speak that implied that these higher rates might have actually done some of the heavy lifting.
Is the long end doing some of the Fed's work for them? Absolutely, but that's proving not to be enough.
It kind of feels like we're in a sort of everything, everywhere, all at once market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Rabbits, I'm Jonathan Ferro. Our top story this morning, President Biden touching down in Israel, his trip unraveling before it even started. A single blast at a hospital in Gaza killing hundreds. Israel is blaming Hamas. Hamas is blaming Israel. Tensions already at boiling point across the region. The explosion threatening to tip things further over the edge. The president says he's outraged.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there who are not sure. So we've got to overcome a lot of things.
The stakes for this trip could not be higher. How do you prevent the conflict from spreading? How do you ensure aid gets into Gaza and civilians are kept out of harm's way? Our team coverage begins right now with Bloomberg's Ollie Crook in Tel Aviv. Ollie, good morning.
Yeah, John, you've outlined a lot of the main issues and the fine line that Biden needs to walk today, in a very different trip, as it turns out today, than what he was planning for yesterday. Initially, this was a two-legged trip, one first in Tel Aviv in Israel, where we were supposed to hear the kinds of messages of support that we've heard from the U.S. administration throughout this entire time. Again, emphasizing deterrence. I mean, right behind me, you cannot see it. It's probably just brightness. That is the Mediterranean Sea, the East Mediterranean, where the U.S. has sent two carrier groups in order to deter any spillover. And of course, right now, as we speak, Biden is in this building just one floor below, meeting with Netanyahu and the war cabinet in order to discuss what the next possible actions are. But then again, the part that we lost of this trip was the trip to Jordan, where he was supposed to meet with the president of Egypt, the King Abdullah of Jordan, and of course, Mahmoud Abbas, who presides over the West Bank. And that part, the diplomacy, is really the key part of this trip, and that is the part that is no longer going to happen.
It is absolutely extraordinary, Oliver, to see the images of the President of the United States and the Israeli war cabinet moments ago, comments by Mr. Netanyahu, comments by Mr. Biden. It was brief as well. What will they actually talk about? Are they briefing the United States on a war to come?
I think that will probably be part of the discussion. And of course, Tom, the focus this morning has been squarely on the last sort of 14 hours, where we had that blast over that hospital in northern Gaza, where now it seems, and this is sort of the main news line to have emerged from Biden as he's arrived here, saying that it seemed as if he believes that it was not the Israelis who were responsible for this, but in fact, potentially there's more credence to this idea that the IDF has been saying that this was a malfunctioning of a rocket fired within Gaza. Again, there is still a lot to be found out on this, so certainly that will be part of the discussion. But yes, Tom, we've been talking about this ground incursion, invasion, all of these sort of euphemisms for whatever will come next on the ground in Gaza from Israeli forces, and I'm sure that is going to be front and foremost in these discussions, particularly when last week Antony Blinken made it very, very clear that yes, they have Israel's back, yes, they have the full support of the United States, but how? The how of how Israel goes about dismantling Hamas is going to be absolutely critical.
And the pressure is only rising overnight. Over the past 12 to 14 hours, we've seen protests around the world, including in the West Bank, including in Jordan and Lebanon. How much is the feeling on the ground among officials that things are spiraling at this moment versus some of the imagery that we've seen, right? I mean, how much do people sense that you're speaking with?
I mean, what I will say is that you wake up this morning with the headlines that we saw overnight and what happened in northern Gaza. That is, you feel it immediately, and you feel it immediately around everybody. And you know, people waking up and talking about the latest things that have happened. This sends a shudder down the spine of everybody. I mean, if the reports are accurate, according to the Palestinian Health Authority, that's 500 additional dead at this hospital. And you know, again, if you want to get into the nuance of whose fault is it, to a certain degree, that is going to be irrelevant to certain actors here. And we saw that anger and that fury on the streets across the Arab world, in Turkey and Lebanon. We saw it in Jordan and in the West Bank. And again, this makes it just all the more difficult, particularly when the diplomatic side of this trip has been basically blown to pieces by the explosion that we had this morning in Gaza.
Ollie Crook on the ground in Tel Aviv. Ollie, as always, sir, stay safe. A deeply uncomfortable tension hanging over that region over the last 2 weeks or so. Joining us now to continue the conversation, Bloomberg's Maria Tadeo over in Brussels. Maria, several reports indicating there are several attack threats at several airports across the continent. What's the latest?
Well, Jonathan, this continues, and again, it speaks to some of the tension that we've seen already play out. And the situation now in France is that a total of 6 airports have been suspended, the operations there, because of a bomb threat, and that is being investigated. On top of that, you have to factor the situation that took place here in Brussels 2 days ago, a man who shot 2 people on the streets. And you go back to Friday when a teacher was stabbed in France. Now, you've seen a lot of heightened security across Europe. I go back to the words of President Emmanuel Macron, who did say the terror threat has certainly increased over the past few days, and also this warning that Europe should not import tensions. Obviously, he's talking about the situation between Israel and Hamas, but also even a bigger religious component to this into the continent. Having said that, when you look and speak to officials, they all say clearly they are worried, and obviously they pay extreme attention now to national security when it comes to potential terror that may play out.
Over the initial days after the attack on Israel by Hamas, there was a lot of support from European officials for Israel. Recently, we've seen a number of participants really come out in critical sort of tones about Israel. How much is that support waning, or how solid is it at a time of a very fraught tension across the region?
Look, it's a very good question, because it also speaks to the different dynamics and the sensitivity across European countries. Now, what they all agree, and yesterday, remember, there was an emergency meeting by European leaders, is that they stand with Israel when it comes to the terror attacks that they took place. Today, the head of the Commission, von der Leyen, repeated it is Hamas that has unleashed this terror and a new spiral of violence. The issue, however, has to do with the people of Palestine and the level of humanitarian aid that will be provided to specifically Gaza. You have countries that say immediately they need to let in the humanitarian aid. The other point here is that for the Europeans, they say the issue at hand now is that you have a military operation that is taking place in a place that is very densely populated. The people need to get out. And it is very important to stress here that the key in the eyes of the European Union is Egypt. The problem, I'm being told by European officials, is that the Egyptians are very concerned about opening corridors into the country, because they fear, A, they're going to get an incredible number of people, so a mass exodus of people, and then this is not going to be a short-term situation, but could be a permanent settlement. And it's a country that is under enormous economic tension. So you see there's a lot of factors playing into this.
Maria, all of this is symbolism. For those of you on Bloomberg Radio, as the president and Mr. Netanyahu met, there were American flags and Israeli flags over the shoulder in the background of Mr. Biden, and Mr. Netanyahu, Maria, had only Israeli flags over his shoulder. How alone, from where you sit in Brussels, how alone is Israel right now?
Look, Tom, it's a difficult question, because, again, you go back to the different sensitivities that play into this issue. Now, for the bigger part, the European Union still says Israel was attacked unprovoked, and they have every right to go after Hamas. But it really is about the people of Palestine and the response when it comes to civilians. If you listen to Olaf Scholz, he was there yesterday in Tel Aviv. He points to this idea that Germany has a moral duty to the state of Israel and has to stand with Israel. You look at another number of countries. I'm thinking of the Irish, the Belgians, even the Spanish, who do say at this point there is a level of collective punishment that it is not acceptable. At the same time, Tom, you have to factor the idea that for Europe, this is a very fine line, because on the one hand, they want to be seen as supporting Israel, but they also say that they are the country that obviously aspires to all of this great democratic values. So it's a very difficult thread to walk when you, on the one hand, have to support Netanyahu, who's incredibly controversial in Europe, but also push for a humanitarian resolution to the problem.
Maria, I want to finish on the relationship with Turkey. We saw a series of protests erupting across the Middle East yesterday, in Lebanon, but also in NATO's Turkey. Maria, talk to us about that relationship now. How on the edge? How tense is it?
Look, Jonathan, it's a very good question, because I have to say the language that I've gotten from officials and diplomats now, it's the most severe I've heard in a week. Ever since this started, they really do say this is a region that is a breaking point, and it is a boiling point. When it comes to Erdogan, you also have to factor that he is someone that speaks to different audiences. When you have Erdogan at NATO, it's a very different Erdogan than the Erdogan that speaks to the Turkish people. And now, obviously, he feels feels he has a responsibility for the Palestinian people. And there is also, I should say, very delicately, but a religious component to this. And on that note, today, the top European diplomat did say that that's an issue that needs to be calmed down, that this should not be played as an interreligious conflict at this point, and that Europe does not want to be almost thrown into this debate where clearly they feel uncomfortable.
Maria, thank you. Maria Tadao, over in Brussels, on the latest on the continent as we look to the Middle East and the tense situation on the ground in Israel. The President of the United States in a meeting, a bilateral meeting, with his team together with Prime Minister Benjamin Netanyahu and his defense cabinet. The latest headlines from that, we'll bring them to you through the next hour or so. The objectives of this trip. The objectives in some ways, Bramo, haven't changed. They still remain the same. One, how do you prevent this conflict becoming a broader issue that engulfs the whole region? Two, how do you protect civilians on the ground? How do you keep them out of harm's way? It was meant to be a two-part trip. One to Israel, that's taking place right now. The second part to Jordan, as soon as we got news of that blast at the hospital, the explosion that took place in Gaza yesterday, the second part of that trip got blown to pieces.
Off the table, meetings canceled, the summit over in Jordan not existent. So now the question is, have the facts on the ground moved ahead of the planning of this trip? Can he accomplish one of the key components of this trip? If you are having these kinds of conflagrations and these tensions and the powder keg that Maria today was just talking about, we don't know the answer. So now that really focuses on the humanitarian side, the how that Ali was talking about earlier.
The diplomatic challenges get that much harder after the events of the last 24 hours or so. If you are just joining us, here's the price action for you in the equity market. We are negative. Session lows, we're down by 0.4% on the S&P. Yields are a little bit lower by a single basis point, 481.96 on a 10-year. Yesterday, some big moves higher at the front end of the curve. The 2-year back through 520 off the back of a blowout U.S. retail sales report. Really strong data, arguably bringing the Federal Reserve back into the conversation. Now, if the Federal Reserve wants to entertain that, they get plenty of opportunity. Tons of Fed speakers through the next couple of days, including Lisa Chairman Powell tomorrow.
Yeah, the Fed speak just keeps on coming. And today we get a whole host of additional Fed speak, including Fed Governor Chris Waller, New York Fed President John Williams, Fed Governor Michelle Bowman, Richmond Fed President Tom Barkin, Philly Fed President Patrick Harker, Fed Governor Lisa Cook. That's all today and the Beige Book.
That is insane. Well done, by the way.
Thank you.
Nice.
I appreciate it. I'm learning from the best. Yeah, exactly. I was inspired.
It was a Billy Joel moment.
Is that what that was, Tom?
It was a Billy Joel moment.
We've got a lot to get through. The distractions right now. I go back to what we said a little bit earlier. You've got the escalation abroad, the dysfunction at home, can't get a speaker in the House, and you've got a bond market that just will not stabilize. It just won't. The volatility we're seeing in treasuries day to day in either direction, double-digit moves. A lot of people spooked by some of the volatility we're seeing, Tom, in the bond market.
And this core stability here is a rising inflation-adjusted yield. The adults that we have on the show here within this turmoil, this cacophony, go back to, to borrow just a simple phrase, John, the cost of capital, of doing business as a household, of doing business as a truly small business, frankly, of doing business of Procter & Gamble. With their earnings today, the real yield changes everything.
Honestly, I'm just looking at the idea that normally in a time of uncertainty, you get a risk-off move, and that yesterday we've got yields touching the highest levels going back, to 2006. What does that tell you about the moment that we're in and the potential new outlook that people might have to reckon with?
Equities are up on the week. Positive Monday, unchanged yesterday in the face of what we saw take place in bonds. Binky Chada, Deutsche Bank, up next.
In global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears.
that a small nation is forced to suicide.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
This cabinet came together and standing strong, standing united. And I want you to know you're not alone. You are not alone. As I emphasized earlier, we will continue to have Israel's back as you work to defend your people.
President Joe Biden speaking moments ago in Tel Aviv alongside Israeli Prime Minister Benjamin Netanyahu, standing shoulder to shoulder with the people of Israel. The president's diplomatic efforts getting that much harder following the blast that killed hundreds at a hospital in Gaza. The blame game, TK, this morning continues.
The blame game is going to continue, and the different reports, I think I read Duffer's really solidified it as well around 3 different themes. We don't need to go into them right now. I think people have early in the morning have identified the horror of this and then the blame game, but I'm not sure how that blame game fits into a beachfront hotel that David Kopensky in Tel Aviv where the president meets with the prime minister. They've got to be focused more on the diplomacy.
That meeting ongoing. When we get headlines from it, perhaps even a briefing will bring that to you. If you are just joining us, equities negative on the S&P 500, down here by 0.4% on the S&P. Yields coming in a couple of basis points, 481. One eye on crude all morning, up by close to 3% on WTI, 89 handle on WTI crude. On Brent, 92.22. Tom, on Brent crude, up by 2.6%.
That's a commodity to look at, and we've mentioned the yield here a lot through the morning. Thank you for joining us, and we will continue to focus on the markets here. But, John, I would look at currency as the litmus paper, and it's a really interesting response. And what I'm watching more than anything, and it was a theme at the IMF meetings, is wither EM. Everybody's focused on the majors, and I'm looking at all the different tea leaves of various middle and lesser countries to see how their currencies play out. Many of them are weaker.
It's a pick up on one major currency pair, the euro against the dollar. 105.56 here, Tom. We're negative by 0.2%. Bit of dollar strength out there at the moment.
Watching dollar yen as well, 149.69. I will call that stability. He is Senior Vice President of Stability at Deutsche Bank. Bikram Chadha joins us now, Chief Global Strategist, Head of Asset Allocation as well. What an urge to go to cash right now, or go to 5.XX% money market fund. Describe how you tell the Deutsche Bank world, don't go to cash.
I think that, if you think about the equity market, you think about earnings, most important, basically fundamental, near and medium term, I would argue. And the story with earnings is a very simple story. They bottomed in the fourth quarter of last year. We've had solid sequential growth in the first quarter, second quarter. We are pretty constructive on what we get in the third quarter. Right. So far, what we've gotten is better than our constructive view, is the way I would put it.
But I went back yesterday, Binky, and I looked at World War II, and I went right for, you can do this on the Bloomberg, folks. You look right from Pearl Harbor out to VJ Day, and it was a nice vector up through the nominal GDP of a war economy and all that. Now, this is not an analog to that, but the emotion is still there. Right. How do you contain your emotion when you're asset allocating with bond price down, yield up?
So I think actually the S&P 500, the market is controlling its emotions, and I think the reason is it understands pretty well what happened the last time around, which is, you know, not very long ago, a year and a half ago, when Russia-Ukraine started. You know, the market sold off. We were down 8%, 3 weeks. We recovered in another 3 weeks, right back to where we were. And so, you know, it just tells you that, by the way, happens to be almost exactly the typical playbook for geopolitical risks and events. And so, you know, given that the market saw this movie not very long ago, it is a bit hesitant, basically, to, you know, do the same thing again.
What we had last year, as you know, was an energy shock.
Sure.
Arguably, in some ways, a little bit more insulated relative to the 70s, given where crude production is in America currently, which is at all-time highs through 13 million barrels a day. The concern now is about America's ability to support these wars. There was a headline yesterday from our team here at Bloomberg that the White House is eyeing $100 billion of Ukraine, Israel, and border aid.
Mm-hmm.
Can this country afford those kind of things, given where yields are at the moment?
Yeah, I think that, you know, it still can. I would say that the rise in interest rates and the focus on the interest cost of the U.S. government, which is not high, but what everybody looks at is the projection going forward, and that's what you should focus. So, you know, it's become a talking point. So it's a good starting point for actually discussing the fiscal sustainability of the U.S. I'd say so far, when interest rates were so low, you know, nobody was really talking about the deficit and what needs to be done about it.
You talked about the conditioning of the Russian invasion of Ukraine, the conditioning of the recessionistas that were wrong, and that people are staying put this time around. Does that make this market more vulnerable to an actual pullback in the face of some sort of surprise? Does that make you more concerned about your base case of an above-average rally?
I think the way that you want to answer that question is by taking a look, or through the lens, basically, of equity market positioning. And here I would focus on, I would break up the positioning. You know, there's the systematic strategies, which is rules-based, and then there's everybody else, which is who we call the discretionary equity investors. And, you know, in July, they raised their positioning for the first time in more than a year. I would say, you know, it's really a FOMO pressure. We looked for a pullback. You look at that positioning today, it has come in. It is sitting right back in the range that it's been in since April, May of last year, which is just a little bit underweight. So, you know, a year and a half, there have been plenty of concerns. I understand this is a new concern, of course, but there have been plenty of concerns and shocks over the last year and a half, and they didn't budge. So, you know, I would argue, I mean, we were in the middle of a pullback already, so, you know, that's why positioning went down. And so positioning is already basically at or slightly below neutral. What history would tell you is that you don't necessarily want to go underweight here unless, you know, you can time. I mean, the playbook would tell you it's really tough because it's 3 weeks and it's big move down, big move up. Yeah.
How much have you changed any aspect of your view over the past, say, 2 weeks, 3 weeks, as we've seen a complete change in the yield regime and we've seen a complete shift in potential geopolitical tensions?
I haven't changed my view at all. I would argue, of course, you know, this is a new negative shock, and I would argue it's probably a restraining factor on the upside because risk appetite is going to be a little bit cautious. But you know, the view is based on what's happening with the fundamentals, and I would say so far, you know, the data actually reinforces the view rather than anything else.
I'm looking at Chada, the great Ellen Ruskin, young George Saravellos. Take the combination of all your work at Deutsche Bank, and to me, the immovable force here, which is a Lawrence McDonald idea, there's just a pile of money out there to support the bid across most, if not all, asset classes. Is that true that you and I have never seen the $1 trillion pile of money that's got to find a warm place to go?
So I don't really think, you know, the equity market performance or resilience is really coming from that. I think it's actually just simply, you know, the economy's playing out. I mean, you look at yesterday's data where, you know, you got this very, very strong response in the bond market. But if you take a look at the data, I mean, retail sales, is a nominal variable. So the first thing that you should do is look at it in real terms, which would tell you something about the volumes that people are consuming. Once you do that, the picture changes completely. Retail sales, the real retail sales, were growing in a very clear trend channel prior to the pandemic. The pandemic, for reasons that we all know, caused spending to go up, came down a little bit, went sideways for a while. But for the last 9 months, year, including yesterday's data point, there is nothing to see there. We are just growing in the middle of the trend channel. I think the surprise is that everybody's looking for things to fall. It's a year now, and so, I think it's the expectations that are low rather than...
Binky, thank you. Binky Chowder at Deutsche Bank. Your equity market on the S&P 500, negative here by 0.4%. Jared Cassidy of RBC on Morgan Stanley earnings. Up next.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to say, damn! Golly, this is a badass knife.
Equities on the S&P 500 pulling back. We look like this on the S&P. On the Nasdaq too, negative across the board. On the S&P by 0.4%. On the Nasdaq 100 down by 0.5. On the Russell, we're negative 0.6. The resilience in this equity market, phenomenal. In the face of this in the bond market. This bond market punishing just about everybody. Getting comfortable at the front end of the curve, were you? Yesterday, yields higher by double digits through 520, back 3, down 3 basis points to 517.76. How many years has it been, Bramo, since we've seen yields this high?
It's going back to 2006, I believe.
Wow.
17 years since the last time we saw 2-year yields at this level.
I think we had cycle highs on a 2-year, on a 5-year in yesterday's session.
Exactly.
Off the back of retail sales. Your 10-year right now down a single basis point, 481.75. 30-year, Tom, getting closer to 5%, 493.
5% seems to be the level here, and it's not out of reach. And I would say with the geopolitics of the moment, the president and the prime minister, that you got to frame out a 20-beat move of 10-year yield out to 5%. Not out of the question, based on news flow and based on data dependency.
Let's turn to foreign exchange, and then we can get to the bank earnings. In the FX market, we looked like this. For foreign exchange on the euro, 105.61. We're negative on that currency pair by 0.1%. Under surveillance this morning, we have to start with the financials, the bank earnings from Morgan Stanley. Third quarter wealth management net revenue, $6.4 billion. The estimate, 6.58. Shanali Basak alongside us this morning, breaking down some of the numbers. Shanali, what'd you see?
Well, that net revenue number is a little bit short of expectations. And remember, the wealth management business here at Morgan Stanley is certainly the one to watch. You also have fixed sales and trading revenue coming in higher than expected. A long trend with the rest of Wall Street here really capitalizing from the volatility you're seeing in broader fixed income currency commodity markets. Morgan Stanley has been working very hard to grow that business very meaningfully. Now, equity sales and trading comes in at $2.5 billion above expectations. This has been an extraordinary race on Wall Street that does beat expectations, but it does still come in below where Goldman had come in yesterday at $2.9 billion. That puts Goldman in the lead once again. Again, it's a softer market. However, you do see Goldman really fighting to take share among those big institutional clients by leading with their balance sheet, and where Morgan Stanley has seemed to be a little bit more risk off.
What we're seeing is also that Morgan Stanley third quarter provisions for credit losses are exactly the opposite of all of the other banks. They came in bigger than expected at $134 million versus $126.2 million expected. Do we have an understanding of what's behind this, of whether they have some maybe corporate loans on their books that are souring pretty quickly?
Oh, that is certainly the case. As we know, Morgan Stanley has some very large leveraged loans on their books, including that of X, or Twitter, formerly known as Twitter. But beyond that, remember, it's still a very small number here that you're looking at for those provisions. That's not really the worrisome part here. That wealth management net revenue miss is a bigger deal, and you're seeing the market immediately start to react to it. Remember, Morgan Stanley, from a price to book perspective, was among the most expensive of banks. Most other banks are trading below their book value, even of the largest banks. JP Morgan is the only one trading at a more expensive level, but remember, JP Morgan's wealth manager really was able to rake in the money here. So what is happening among client sentiment here that is getting spooked by the markets?
I take real issue with the classic Manhattan focus, and Shanali, you're expert at following this, if it's all about deals and it's all about who's number one. I don't think James Gorman gives a damn about being number one or number two. He just delivered, and he put it as line 2 in the presser, a return on common equity, which I'm going to casually say is double Fortress Goldman Sachs. I mean, are we at a shift here where IB is not as important as it used to be? And the fact is, it's about persistent cash flows?
I think it's too early to get excited about that point of view here, because investment banking has among the biggest returns on equity typically on Wall Street. We are in a down market. Why is it such a good business for banks? All you're really paying for is the banker, as long as you're not spending too much trying to lend your balance sheet out for these kind of risky leverage loans. But it is a down market. You have these bankers saying it's going to come back. It's a lot of wishful thinking in an era where we're looking at a lot of tensions around the world, and there are a lot of questions about whether they can really be making money on this business over the next year or so. They think it'll come back. But to your point here, the things that are driving their returns, and they're not the only ones, Tom. JP Morgan, Bank of America, Morgan Stanley, now both all inking double-digit returns on equity in this environment.
How much are we seeing a real divergence between the money centers like Bank of America, Citigroup, and JP Morgan from Goldman Sachs and Morgan Stanley that both missed on net interest income, as well as Morgan Stanley saying that total deposits came in below previous expectations in the market? How much does this sort of highlight the, I should just say, the gift of free deposits, or basically free deposits for the largest money centers?
That's a great question here, because if are free deposits a gift here? You see Bank of America getting punished all year long for taking those deposits and plowing them into treasuries at too high a valuation. Fast forward to today, and they're sitting on it, and it's the opportunity cost that investors are concerned about. Why get 2% when you could be getting more than that? So it's what you do with those deposits that's the real question at the end of the day. It's balance sheet management. It's getting complicated.
It's a miss for wealth management over at Morgan Stanley. The stock a touch lower, down by 1.6%. Shanali, thank you. 79 in the pre-market. The numbers, Tom, for third quarter wealth management. Net revenue, $6.4 billion. The estimate, 6.58.
And maybe the legacy of James Gorman as they go through a succession process at Morgan Stanley. Shanali Basak, of course, on top of that story. Joining us now with decades of perspective on the shifts in global Wall Street, Gerard Cassidy, to say he's large cap bank analyst at Canada's RBC Capital Markets, barely describes a perspective. Gerard, to rephrase my question to Shanali, where she beat me down and said, Tom, you don't know what you're talking about. Let me go to you, Gerard, to save the day. And that is, I'm sensing a new global Wall Street. They really want persistent cash flows. Is James Gorman showing the future to the other banks?
Tom, I think you're really onto something, and you've got to give James Gorman credit. He's really changed Morgan Stanley from where it was back in 2009, when it was heavily reliant on trading and investment banking, and is diversified into the wealth management or retail brokerage business, if you want, as well as asset management. And it really comes down to consistency of earnings or consistency of cash flow, as you point out. And that's what Goldman tried to do with their expansion into the consumer banking business, which has failed miserably, of course, and they're exiting that now. They want the model like a JP Morgan, which is diversified revenue, or Morgan Stanley, which is less diversified than JP Morgan, but is still more diversified than where it was back in 2009.
Joe, as you know, banks have been a pretty lousy investment in the stock market this year. It's JP Morgan versus everyone else. JP Morgan up year to date by 10%, everybody else down, and some of them down hard. Joe, what separates what's happened at JP Morgan from the rest? Is it just First Republic?
John, that's part of it, but the performance for JP Morgan, even prior to them acquiring First Republic, was better than the pack. And I think what you have here is a flight to quality. Everybody knows JP Morgan is one of the premier U.S. global bank. It's demonstrated that with very good results, strong leadership, of course, under Jamie Dimon and his senior management team. And every time, John, we go out and talk to institutional investors, the scar tissue from March and May is very thick, and people are underweight the banks. And when we talk to them, they always tell us, we're underweight the banks, but we own one bank, JP Morgan. JP Morgan is owned around the world.
When we look back at this period, Gerard, are we going to say that this was the year that JP Morgan consolidated its heft at the expense of a lot of smaller banks?
I would say, Lisa, that what JP Morgan has done is shown that the diversity of revenue and very sharp, very focused management by the Jamie Dimon and his senior team really has demonstrated really strong numbers. We were talking a moment ago, Tom mentioned return on equity. And if you look at the consumer banking business for Bank of America under Moynihan, Dimon at JP Morgan, the consumer banking businesses are earning close to 40% return on equity. And as we all know, that's incredibly high for banking businesses. That's what's driving it. And JP Morgan is one of the leaders in consumer banking, and Bank of America.
They are, though, the leading players at a time when they can be selective for the top-rated consumers, right? And this is something that we pointed out, according to Shanali Basak, our own Shanali Basak, yesterday. This morning, what we're not talking about, Citizens Financial missing on net interest income, United Community missing on net interest income, Ally Financial missing on net interest margin, and also having fewer auto loan originations than previously thought. How much is this story dividing even further between the biggest banks and the regionals that are still in a world of hurt?
Lisa, it's a good point, because some of them have been picked out amongst the big regional banks. Citizens is actually the only one that has missed today. When you look at M&T, U.S. Bancorp, and others, they're in line to slightly better. But you're right about certain banks have missed, and it has to do with, and you touched on it in your earlier comments, about the non-interest-bearing deposits. The banks with the non-interest-bearing deposits are going to do very well in this higher rate environment because those deposits don't pay any interest, obviously, but they don't move either. People need operational accounts. Personally, we all do, as you know, as well as companies. And that money is gold in an environment like today. And the banks with the higher levels of non-interest-bearing deposits will do pretty well.
Jared, I have to admit, when I read the comments from Brian Moynihan with David Weston in that interview, I was kind of surprised, Jared, because he was talking about the consumer slowdown. Can we just finish there? Retail sales looked great yesterday, really broad-based, big upside surprise. Then the Bank of America boss comes out and says the Fed has basically achieved what it wanted to achieve. We've got a consumer slowdown. Jared, is that a consumer slowdown for Bank of America, or is that a broader story for the economy? Which one is it?
Yeah. John, good point. And the cross currents today, it's always easy to say today is more challenging than 10 years ago or during the financial crisis. It's always challenging, but the cross currents today are pretty strong. And you just summed it up very well. So we're hearing from some folks the consumer is slowing down, but then you see the retail sales number, and it was quite impressive. And if you look at the real GDP now number, which comes out of the Atlanta Fed, which is the current estimate for real GDP this quarter, third quarter, it's over 5%. It's crazy. But I would say that it's not Bank America specific. And I would say Moynihan, in response to my question on the call, actually, he was pointing out that he thinks it's going to stay around this level. The higher spending a year ago was unusually strong for them. High single digits. Now it's around 4%. Should trough out about these levels, but it's still positive growth.
They've been more selective about the clients they serve. Lisa and I have been talking about this through the last 24 hours, actually off the back of the data that Shanali shared with us. These credit scores of these customers, Jared, are so high. Who are they serving in this country? Just a really small slice of the economy?
I think they're serving guys like you, John. They're serving all the, the higher quality credits. So
it's close to 800, right. Gerard. Don't disrupt it.
Yeah, but I'm at 242, so be nice.
Talk about it. I'm very focused on it. How's your credit rating?
242.
242.
Thank you.
But
it doesn't go there.
But quickly, John, you're bringing up a really good point, and I recommend, I know you guys are busy, but look at their slide they put in their deck, Bank of America, where they compared themselves today to 2009. Totally different company, de-risked, and you put your thumb on it. They're going, higher scored consumer as well as corporates.
Jared Cassidy. Jared, good to catch up. Always is, of RBC. If you're just joining us, welcome to the program. Your S&P 500 negative by 0.4%. Shanali, that was a standout for a few of us yesterday to see those credit scores of the customer base of Bank of America near 800. For anyone who doesn't track their credit score, maybe as closely as some of us do. Shanali, that's very high.
I'm starting to do a lot of analysis on this too, because the average American doesn't have a credit score nearly as high as what Bank of America is posting of its customers. And if you look at the next generation, millennials, and the generation below, it's even worse. Many don't even have a 700 credit score. And so it really begs the question, who is getting a loan and the types of loans, right? I mean, it's worse for if you're trying to get a car or a home equity line of credit.
Just to put this into perspective, I did some review of the FICO realities, and the scores range from, I believe, 300 to 850. The average across the board for Bank of America's customers is close to 800.
That's nuts.
That's the average. Just
and
to
the
give
high
you a
is
sense.
850. So it's you have to near perfect.
Exactly.
It's insane.
That's where we're at right now.
Let's just say you had a blowout summer. Some of us might have done. You dropped down from 800 just for a couple of months. Just a couple of months of overspending.
This feels deeply personal.
No, I track it very carefully.
Do you really?
I track it very carefully, yeah. It becomes something that I look at every month, yeah.
Really?
I get an update.
It's like a...
Yeah, I get a monthly update.
A view on your...
It's a view on my spending activities and how...
and whether you can
how
actually
strict
work
I'm being,
at Bank of America.
how disciplined,
yeah,
and whether I'm allowed to be a customer of B of A, apparently, based on some of those stats. Shanali, thank you. Great work, as always. Stephen Stanley of Santander coming up in about 45 minutes from now. If you are just joining us, welcome. Your equity market is negative. We're down by about 0.5% on the S&P. Yields are coming in a couple of basis points, 481.54, and crude is rallying just short of 90 on WTI.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
If I have to choose a camp, I'd be in the camp of I expect that there will be a bit more tightening by the Fed. So probably an additional rate increase this year. But what's as important, in fact, what's more important is the path of policy over the course of the next 12 to 18 months.
It was Mark Carney there, the Brookfield Asset Management Chair, speaking with David Rubenstein. Mark Carney has been named chairman of Bloomberg's board of directors. If you are just joining us, welcome. Your equity market on the S&P 500 negative here by 0.4%. Yields are lower by a couple of basis points on a 10-year 481.54, and crude with a rally here, Tom, 88.64, up by more than 2%.
I'm getting up to speed on Everton. Mr. Carney cut me off the other day and said my pronunciation was wrong, and I said I'm an ugly American, but he's a big supporter of Everton, so I'm learning.
You said that a few times.
Quickly, yeah.
Okay.
He's a former governor of the Bank of England. John, how does he react to 6.7% inflation? I was in the news flow, folks. This stuff is all second tier. But I'm sorry, to the people of the United Kingdom, 6.7% inflation is not second tier.
It depends what's driving it. You can look through it if you truly do believe it's transitory. We found out that maybe this burst of inflation is not. I say that Carney was an interesting one in the news conferences. Sometimes slightly combative in the news conferences on Threadneedle Street. TK, sometimes.
Let's go around the table quickly here on what we've seen in bonds away from the geopolitical news that we continue to give you. Our Oliver Crook is at the Kempinski Hotel with the president and the prime minister in Tel Aviv. John, I still go back to the real yield, 2.40%. Staying there. There's a raging debate, John, if inflation-adjusted yields will have an effect on this economy. My answer is old school, they will.
Elisa was talking about nominal yields, 17-year highs. I've said this a few times already this morning. I think it's worth repeating. You get comfortable with parts of this bond market, and you get punished. We were getting comfortable with the front end.
Exactly.
Steve Major, HSBC, was talking about how maybe the flexibility is all at the long end. We talked about that a million times. Then all of a sudden, the front end, off the back of much firmer data than we expected, starts to speak to the idea that maybe we can bring the Federal Reserve back into the conversation. Perhaps not in November, maybe further down the line in December. What we've heard from lots of Fed officials already in the last 24 hours is a willingness to wait. They believe they've got a little bit of time. You see more of this data going into December. Maybe they come back in. It's Chairman Powell's go tomorrow with David Weston. Let's see what the chair's got to say.
Lisa, quickly, price down, yield up. What are you looking at?
Well, I mean, I think that I'm just looking at how disorderly this ends up getting, the ping pong. It's not just up, it's not just down. It's the volatility and the inability to really frame out what the catalyst is going to be any given day.
Let's go to the disorderly. Winnie Caesar, we've asked to come in, global head of strategy at Credit Suisse, truly expert on the disorder that Bramo sees. How is the disorder in the fixed income world?
This disorder is definitely challenging. It's definitely getting some portfolio managers caught a bit offsides. Like you said, people have been hiding in the front end. That's been a really good trade if you're an investment grade portfolio manager. But now the big question is, when do I insulate? When do I extend duration? And every time that people have tried to do it, it has been the wrong trade. We're still in the camp that you should start barbelling. You should start to extend duration anytime the 10-year is above 4 3/4, 4.5%. But it is going to be a longer term view, and you're going to have to look through this choppy noise in the near term.
The Fed looked like it was out of the game. Sounded like they were, at least for the time being. Is the data going to bring them back in?
I don't think so. I think that the Fed is going to try to be quite patient, especially with real yields where they are, so long as we continue to see you could make the bull case for corporate credits to sovereigns. I don't think
all these things are the fundamentals, right? And I just keep going back to this idea that Priya Misra was talking about, the potential for forced sales should people get caught off sides. How much are there enough sort of core bond portfolio managers that are going to see outflows after such losses that are going to be forced to sell regardless of what the fundamentals seem to pick?
So I don't want to jinx the market, but I think if you were going to see those forced sales, it would have happened in 2022. Corporate bond portfolios, while they've been challenged lately, are still doing well better than they did all of last year. There's also a very strong, dedicated institutional buyer base, particularly in the long end of the curve, that is constantly injecting cash into markets. We now have fully funded pension funds. That's going to be a tremendous benefit to the fixed income and corporate bond markets. And we've seen long end new deals in the IG market actually do pretty well as of late. So that gives me some hope that there's still that structural bid for duration and fixed income.
Winnie, you on the high ground in institutional fixed income investment, and it's all this fancy Frank Mabosi stuff you learned at Emory years ago. Nobody cares. Our listeners who are retirees have been destroyed in the bond market. Do they recover by shifting to equities? Do they recover by shifting to what, John? Crypto? I don't know, Manchester United shares? How do you recover from a 3-year train wreck?
Well, I do think that there has been a lot of kind of recovering by buying T-bills, by putting cash in money market funds. When we just look at the absolute balances in money markets, it's amazing, and that's a tremendous benefit.
Can that break the buck? Can that destabilize and break the buck?
I don't think so, but we still have a long way to go in terms of wherever policy ends up being normalized too.
Let's breathe some life into the conversation that Tom's been trying to have, I think, for the best part of 18 months now. At the long end in sovereign debt markets, from treasuries to gilts and elsewhere, we've seen losses of something like 50, 60 percentage points. We're looking at some gilts that were issued in 2020, a 30-year that matures in 2050, trading in the 30s. We're trying to work out whether we fully realize the pain associated with those losses. Have we?
I would like to think that we have. When we look at the street forecasts, 10-year treasury yields above 5% is not the base case for most people. Now, we've all been surprised by how much higher and higher yields continue to go. And at some point, there is the reality of that interplay between, all right, is this money good? Are we going to get paid back at par in 2050? If so, we should all be buying that, 20-year treasury that's trading at 47. I haven't been able to find it, unfortunately, but I would be buying it if
How
I
illiquid
could.
is that 20?
It's pretty illiquid.
Because you look at the curve and
Yes.
there's just this kink in the curve. The 20 is just doing its own thing.
And there's a 20-year auction today, so are we
Oh,
suddenly going to be
thank God.
talking about
Finally,
20-year
news we can use.
kind of reopening that's going to
Just
totally
on that.
roil everything?
Why would you have a 20-year auction when it's priced the way it's priced? What's the objective there?
They have to, because they already came up with a schedule, and if they abandon it, that will cause more disruption, and these auctions are going to be 25% bigger each month going forward at a time of incredible illiquidity and dislocation.
Joining us now.
Messy situation.
Yes.
It's messy. Absolutely messy.
Lisa Bramwitz now with ABC Bond House. Lisa, on the 20-year, can it shake up the market seriously this afternoon, like the 30-year, which I didn't care about?
The irony is, yes, It can, even though it's not a very liquid tenor, it's not very popular, it's not a very big sort of total outstanding. I would argue, watch this change everything in markets, not disruption in the Middle East, not any kind of potential good news out of any of the banks. It is going to be, ultimately, about bond market dysfunction.
Do you see how her voice changes when she starts talking about
She's
this
passionate
murder?
about this.
It's easier to be passionate about this than other things right now.
But if you look at the curve, 3 years and out to 30s, the highest yield on the curve is the 20-year maturity. Just this kink there, and then it drops back down to the 30-year. Something like almost a 20 basis point spread between the two. It's kind of bizarre.
It's the price for illiquidity. It's basically what people are charging to not be able to move it with any kind of regular predictability.
I make it a 23 basis point spread, 22, something like that. It's kind of nuts. Winnie, good to see you. Winnie Caesar of Credit Sites, following another big sell-off in the Treasury market. Coming up on this programme, we need to talk about the latest on the ground in Israel. John Lieber of the Eurasia Group weighing in. The President of the United States, Joe Biden, alongside the Israeli Prime Minister Benjamin Netanyahu in downtown Tel Aviv. The latest on the ground with Bloomberg's Ollie Krug coming up very shortly. Going into that, we've got crude rallying up by 2.3% on WTI to 88.65. On Brent crude, that contract up 2%, almost $92 a barrel. From New York, good morning.
I'd like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're
in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The free ride that equity markets enjoyed for much of the last of 10, 15 years, it seems to have come to an end.
I think the Fed really sent the message home that we are going to be higher for longer.
There's no doubt that we're not going back to the free money era.
The market's really now in a daily tug of war with policymakers around the path of rates.
What about the impact from 0 to 5.25 in the last 18 months? We have not seen the full impact of that.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Our top story this morning, President Biden in Israel. A diplomatic effort upended by a single blast at a hospital in Gaza. Israel blaming the attack on a failed missile from the militant Islamic Jihad group. Hamas and Arab leaders blaming Israel. America wants an investigation.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there who are not sure. So we've got to overcome a lot of things.
The stakes for this trip could not be higher. The objectives that much harder to achieve. How to prevent this conflict from engulfing the region and ensure civilians stay out of harm's way. Our team coverage starts right now with Bloomberg's Ollie Crook in Tel Aviv. Good morning, Ollie.
And John, you've just put it in very good terms in terms of the stakes here, but also the difficulty here for Joe Biden, who 24 hours ago told us that he was going to come to the region, come to Israel, come to Jordan, and now that entire trip has been thrown completely up into the air. What we knew originally was this blast at the hospital has completely changed this. What Biden can achieve here is to give his support to Israel, as all of the delegates from the United States have done thus far, continue to deter with the naval fleet that the United States has sent to the East Mediterranean. But the third part, and probably the most critical part of his trip, where he was supposed to go to Jordan to meet with the leaders of Egypt, the West Bank, and of Jordan to discuss de-escalation, to discuss all of the many issues from hostages to aid, that has been completely thrown off the rails by this explosion overnight.
Oliver, an unfair question, but a question of the moment. Sitting to the president's right was the Secretary of State. Is shuttle diplomacy dead on this Wednesday morning?
Well, you have to imagine how Antony Blinken feels now after 6 days of going from country to country and speaking to, people with a lot of different opinions on this matter, and with a lot of different constituents and a lot of different populations who feel a lot of very mixed feelings about what's going on. And it was really him who laid all of the groundwork for this very delicate trip into Jordan, and that, again, has been completely derailed. And this is, again, at the center of this. We have Jake Sullivan here as well. We have the entire cabinet of Israel meeting with the president right now. But again, who we do not have at the table are some of the people that you really need at the table to have meaningful progress in what is a conflict that is only escalating.
Ollie, there were a couple of parts to this trip. One was the diplomatic part, as you were talking about, but there also was a question about humanitarian aid to Palestinians who are still stuck in Gaza. What is the sense that people have of whether some of those provisions will be allowed in and they will get water, food, medical supplies that are running out?
So this is something we've been talking about for the last few days, and there keep to be these sort of stop and starts and a lot of rhetoric saying that Israel will create the conditions under which that border can be opened and some of that aid can come in. As you will know, there are literally hundreds of tons of aid sitting on the Gaza-Egypt border at that Rafah crossing that cannot move right now. And this is going to be, if there's going to be any win here for Biden, is potentially finding a way to get some of that aid in and to sort of throw put an olive branch out for what is, again, a very dire situation on the ground in these hospitals after one that gets hit that is completely inundated with people with limited water, electricity, and internet in Gaza.
Oliver Crook, thank you so much. Greatly appreciate it this morning. John, what are your thoughts here, just moving the last 3-4 hours through this? To me, it's truly history being made.
It was difficult, Tom, and it got that much harder overnight, without a doubt. They want to stand by their ally, Israel. It gets that much more difficult and complex after the events of yesterday, and we still need to work through the facts and try and get some clarity on a situation, Tom, that is difficult to get clarity on. Let's be clear about that. Very difficult.
And my arch theme here, folks, is the change, and the change is the media, the immediacy of the imagery, what we see on social media, what we're seeing with all the modern technology makes for a different conflict, a different war. With wonderful perspective on this is John Lieber, head of research, managing director at Eurasia for the United States. He's worked with a senator from Kentucky for years on the Hill. Hey, John, honored to speak to you. I want to go back to your classroom at Tufts University years ago. You and I lived, you and I studied 1967 and 1973. This is totally different. And yet, are we fighting the last war?
I mean, this conflict has been raging for decades. And, you know, the difference right now, of course, is that Israel is targeting Hamas in Gaza and trying to wipe out their leadership. So it's an enemy that doesn't have tanks and doesn't have planes. It's an enemy that they're trying to, you know, they're going to have to go into civilian areas to target. And, you know, the Israeli Defense Forces over the years have become, have been attacking these lands. And it's really difficult to get after Hamas that way. You know, I think one of the big questions is whether or not there's going to be a ground invasion anytime soon. And I suspect that one of the things Biden is in the Middle East trying to hold off on is that ground invasion because of the risks of these horrible atrocities that happen against civilians in times of war. And that's got to be one of Biden's main objectives, in addition to trying to stabilize the region generally and make sure that, most importantly, Iran stays out of this.
John, we know what Israel's objective is, the ultimate objective. You alluded to it, wipe out Hamas. Let's talk about how difficult that is to achieve. Where is the leadership of Hamas? Where does the financing for Hamas come from? How do you wipe out Hamas purely just by going into Gaza and having a full ground invasion?
Well, obviously you can't. And I think what time has shown is that when going after these terrorist organizations, even when you go after the head, when you successfully take out the head of these organizations, there's other leaders who will rise up. The U.S. has been targeting Hamas financing networks for decades through money laundering efforts. They're going after their ability to conduct financial transactions in crypto. But it's unlikely to me that even if the Israelis are completely successful in this campaign, that the threat on their borders is going to go away because of the fact that there's so much history and anger here. And, getting rid of Hamas probably means somebody else comes up.
Especially given all of the protests and anger. There's been some fiery rhetoric out of Iran over the past couple of days threatening some full-scale invasion of Israel if there is any kind of ground escalation into Gaza. How can you read between the lines to understand just how much resolve there is by Iran to get more intimately involved, to order Hezbollah troops to come in from the north?
Yeah, that's one of the big questions in this war right now is, does Hezbollah get involved? Does the war expand to Israel's northern border? And I think it's notable and interesting that the U.S. and Israel have really gone out of their way to say, we don't think Iran was directly involved in the attacks against Israel that occurred last weekend. Of course, Iran is complicit in financing Hamas, financing Hezbollah, and giving them support over the years. So right now, it looks like the U.S. goal and the Israeli goal is to keep the Iranians out of it. That doesn't mean you won't see over a longer period of time kind of a shadow war that the Israelis have been conducting against Iran continue. That may not mean direct armed conflict, but it could mean cyber attacks, potentially targeted assassinations and things like that. So far, Iran's giving no indication that it wants to be involved, but is sending really strong warnings that if the Israelis escalate, they could get involved. And that is really what makes the situation such a powder keg.
John and Tom earlier this morning were really rightly pointing out how little we actually know, how difficult it is to ascertain with any clarity the facts on the ground in a fast-moving war with a lot of people of varying dependency giving information. John, how much has the landscape shifted over the past 12 to 18 hours, given all the protests, given the outrage, given the statements from Egyptian and Qatar and Saudi Arabian leaders?
Spawning at the hospital was obviously a major event in the course of this short war so far. But there's a lot of ambiguity about who did it, how many people were killed, and it's really, really difficult to ascertain the facts because there's not a lot of independent media on the ground. It's not like a lot of forensic investigators can get into Gaza to figure out what actually happened. Some of the photographic evidence that came out this morning suggests the blast wasn't as large as initially said. But I think the key point here is that with Israel launching attacks on civilian populated areas, if it wasn't this hospital attack, it would have been something else. And it was only a matter of time before anger at the Israeli Defense Forces spilled over into the Arab streets and led to some blowback on Israel just because of the nature of these operations. And so you've got a very uncertain information environment and a very deadly military environment, and so the battle of the narrative is going to be really, really difficult for any one side to win in this situation.
John, let's talk about the military aspect of this as well, and let's finish there. Just going through this major monster deterrence that the US has been building up in the Eastern Mediterranean, in addition to 2 aircraft carriers and the ships escorting them. I had a report from the Washington Post yesterday. The US is also sending an amphibious task force aboard warships. John, how meaningful is that as a deterrence in the Eastern Med?
I mean, militarily, nobody can defeat the United States, right? I mean, it's the most powerful army that's ever existed. It's got vast, seemingly limitless resources. There's some question as to what ability they'd have to fight and to support the Ukrainian effort and support the Israelis. But I think that the real question, if I'm one of the regional players who are looking at getting involved in this conflict, is does the U.S. have the political will to get involved in such a conflict? And I mean, it's difficult. It's difficult to see the U.S. Committing troops on the ground here, but they obviously so far have been supporting the Israelis. And I think what this really is a show of force that's meant to deter any action. So there's no question that if there were to be any additional strikes beyond Gaza, that the U.S. could get involved and win this decisively.
Hey, John, good to get your perspective. We'll catch up soon, hopefully. John Lieber there of Eurasia Group on the current situation on the ground in Israel and across the Middle East at the moment. If you are just joining us, welcome to the programme. Here's a snapshot of the price action currently in commodities. A bit of a rally. The rally fades a touch. We're up by 1.8%, $88 on WTI crude in the equity market. Equities on the S&P 500 negative here. On the S&P, we are down by 0.36%. Yields are going absolutely nowhere, 483.43. The bond market been going somewhere, though. That's been lower, and yields up over the last couple of days, big time, both at the long end and the front end as well. I think we've got to fold in what the president might be asking Congress for, Lisa. The White House eyeing $100 billion for Ukraine, Israel, and the border. That, according to people familiar with the matter yesterday.
I saw those figures, and I was wondering, is there going to be the political will to finance this? And it really highlights the difficulty of having a massive budget deficit at a time where there are a lot of concerns in the world, where we're actually, on the wane when it comes to an economic cycle. How does that challenge the U.S.'s ability to spend that kind of money, which they're going to do, right? I mean, let's be honest, but then how much are yields going to go up on the other end?
You mentioned Terry Haynes earlier, John. I'm going to channel Mr. Haynes as best I can, and that is there's something in here for everybody. They've got to create a political constituency, and you can do that with 2 wars and a border. And that's how you get the necessary votes in a completely fractured House and maybe in a partially fractured Washington.
Do you think this House, potentially led by Congressman Jordan, is going to go for some of that spending?
They're going to have enough. I think what Mr. Haynes and others of his ilk would say, Vallier and the rest of them, is they're going to put enough in here where you can't say no. It's a double negative. I mean, I can't say no.
Are they going to be able to have a vote on it? I mean, that's where we're basically at, because Jim Jordan was knocked down as the potential House Speaker. He's got another vote coming up today. So can they even hold the vote, let alone pass it?
Terry Haynes of Pangaea 2 Mondays ago, kept it very simple. He said if he thinks the odds have gone up that we select a speaker and the odds have gone down that we'll get a government shutdown, you're wrong.
November 17th.
That's what he said. You're wrong. The deadline, of course, November 17th. On the economy, Stephen Stanley of Santander. That conversation about 20 minutes away. In the equity market, negative here, 0.4% from New York. This is Bloomberg.
bust through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise? Just noise. It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Thursday, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens October 19th at 12 p.m. Eastern on Bloomberg. Context changes everything.
This cabinet came together, and standing strong, standing united, and I want you to know you're not alone. You are not alone. As I emphasized earlier, we will continue to have Israel's back as you work to defend your people.
President Joe Biden speaking in Tel Aviv alongside Israeli Prime Minister Benjamin Netanyahu, standing shoulder to shoulder with the people of Israel. If you're just joining us, here's the price action going into the opening bound, 1 hour and about 15 minutes away. Equity futures on the S&P, negative 1/3% on the S&P 500. In the commodity market, crude rallying, but those gains fade, up by 1.8%, $88.22 on WTI. Looking at bonds, major move yesterday once again, this time at the front end, yields up. This morning, yields going nowhere on a 10-year. We'll see if that changes later in the session. Your 10-year, 483.43. Remember this conversation, Tom. When bad things happen in emerging markets, you sell the sovereign debt of those respective nations. When bad things happen in DM, you buy those bonds in those respective nations.
That's the theory.
Is that changing in developed markets?
That is a debate right now. That was a heated debate in Morocco at the International Monetary Fund meetings. Joyce Chang, I thought of J.P. Morgan, was really, really quite good. We had the same conversation, I believe it was April, at other institutional meetings of the concern of EM. With a brief this morning with all the news flow, including in the Eastern Mediterranean, Diana Omo joins us with Kirkoswald Asset Management and on desks of EM market makers for years. It's so good to talk to you, particularly off the Barry Eichengreen paper at Jackson Hole and what Joyce Chang talked about at IMF. How bad is it? Mexico is stellar performer even there. Peso off the high is a weaker 8%.
Well, I think what's happening right now is actually the dollar has reemerged again. There's been a huge amount of upside surprises from a U.S. economy perspective, and that's giving a bid to the dollar. Additionally, you have geopolitics, and people are buying dollars as a safe haven. So the combination of those two is taking off some of the shine in emerging market currencies that we'd seen up until the summer.
Stan Fisher wrote that little red book everybody was forced to read. I think it was 1999, 1 year after 1998. Are we anywhere near the instabilities of a given crisis in Ecuador, a crisis in Mexico for that matter, or a crisis in Southeast Asia? What's the level of instability you perceive in EM?
Much less than during COVID, because I think a lot of the vulnerabilities were addressed during that period. The insolvent economies are already talking to the IMF, and I'm sure you had a lot of that in Morocco. The IMF is...
Don't ask about Argentina. Okay, continue.
The IMF is standing ready to support economies. So we don't necessarily think in the next 1 to 2 years we are likely to see anything. There's maybe 1 or 2 credits that look vulnerable, that have maturities coming. But broadly speaking, I think EM should be able to muddle through.
In 30 years' time, will we have a restructuring plan for the United States of America? Is that where things are going? Where's this headed? Where is this going? When you speak to emerging market nations, how are they thinking about what's taking place in America, for all the preaching they've heard about how they should manage their finances. What are they saying about this in Washington?
Well, they've clearly lost the handle on fiscal in the U.S. It feels like whatever is happening, whether it's political impasse, the answer is let's spend some more. When it's geopolitics, the answer is let's spend some more. And you've lost your price-insensitive buyer. We had the QE that was supporting this. Now the markets have to figure out how much premium you need to be if you expect more issuance to come forward.
Yeah, moments ago, Lisa, Damian Sasser are out watching this, and he makes clear he agrees with Diana. He sees quality reserves at EM.
Right. What does quality mean at a time where you've got a treasury yield that is going up and away? Diana, I do want to just sort of put a bow on that point. Are you saying that we have seen the reaction function to weakness? We have seen the reaction function amid a search for safe havens, and treasuries no longer get that bid in a reliable way?
Well, they got the bid when we had the geopolitics headlines a couple of weeks ago. You saw the move in treasuries, which rallied as people still saw them as a safe haven. But despite that ongoing, as soon as we had a bit of stability, markets were quick to unload these treasuries. Because what are we hearing? There's another $100 billion potentially that's going to be spent to support these economies, and markets simply don't have the appetite.
Do you think that this pain will be reserved to the U.S. government debt market? Or is it the kind of theory where when the U.S. catches a cold, the rest of the developing world catches a flu?
Well, I think there's two big elephants in the room, the U.S. and the BOJ, where sovereign debt issues or sustainability have been a concern, but more of a slow-burning concern for a while. Now, while these are playing out, I think they will tend to take everything with them, but it's the speed of the move that matters, and we've had a pretty aggressive move in treasuries. So if, going forward, we say maybe treasuries can go from 4.5 to 5.5, but we're not necessarily going to see that happening in a 6-week period. I think markets can handle that.
Where can we hide? Where can we hide in the end?
You know what I'm going to say? Emerging markets. You're actually getting paid to do the work now in EM. EM high yield yielding north of 10%, EM IG yielding north of 6%. Looks like an interesting space. That said, it's not a one-size-fits-all. Tom mentioned Argentina. We still have cases like that look very vulnerable. I think this is a period where if you do your bottom-up security analysis and you know the stories that you're buying really well, there's a lot of opportunities in emerging markets.
What about Turkey? Fascinating leadership shift taking place in that country. What is going on?
I mean, it's like we had the same outcome in the elections, but it's like a totally different leadership.
It's amazing.
Yeah, so they've embraced orthodox policies now. They're speaking the market talk, and markets are responding well to that. We've seen aggressive rate hikes and a commitment to actually fight inflation, which is refreshing to see.
When you talk about developing markets, I have to think about what's going on right now, excuse me, in the Middle East, and just wonder how closely you're following this as a potential, not only humanitarian and a question around what's going to happen and how wide the conflagration goes, but what this means for the ability to invest in some of these nations.
Well, it's clearly a sad turn of events, and we're obviously following it very closely. I think what the big concern is, beyond the humanitarian cost of lives, is what does this actually mean for, one, the region, stability within the broader region? Are we going to see spillover effects in the Middle East? Are other countries going to get pulled into this? And you've seen actually markets repricing. You've seen CDS in some of these Middle Eastern economies actually move quite high because markets are assigning a premium that it's a non-insignificant risk that you could see spillover risks coming in. And I think broadly speaking, beyond the Middle East, it's oil prices obviously is the next big one, because you have this potential supply side shock, and that could actually make monetary policy much trickier going forward if you see inflation starting to pick up again.
Diana, this was great. It always is. It's good to catch up. Don't be a stranger. Diana Rameau there of Kirkus Asset Management. Speaking of crude, Brent crude off session highs, still in the 90s on Brent right now, 91.36, up by 1.6%. WTI 88.10, up by about 1.6% this morning off the back of that continuing tension, Tom, in the Middle East.
Yeah, I'm looking at 30-year bond, and I'm going to put up a quick 20-day chart here, John, and it's just real simple. 30-year bond buttressed up and about ready to go through October 4, to new highs near 5%.
The two-year yield yesterday through 520. Up by 11 basis points on the session. Phenomenal move this morning. The two-year just about unchanged, down about a basis point of 519.47. Lots to discuss in the next hour on Bloomberg TV. The lineup looks like this for the open. Mike Schumacher of Wells Fargo was bullish. Still somewhat bullish, just badly bruised by the bond market over the last couple of months. We'll catch up with Mike in a moment, alongside Gershon Disterfeld of Alliance Bernstein, Nadia Lovell of UBS, Bramo on the equity market. Attention shifts from Wall Street. Bank earnings basically done now for the major players on Wall Street with Morgan Stanley about an hour ago. Then it's on to tech. After the close, we get Netflix, we'll talk Tesla, and push on to the big players in the next couple of weeks.
And how much does that set the tone if you continue to see the strength that so many people are expecting? How much is that going to be a negative? And I keep going back to the irony. Geopolitical risk, not a concern for equities. You know, the concern about a slowdown, actually good for equities. Upside beats, it's over.
Bond yields apparently didn't matter to equities yesterday, really, either. The S&P was just about unchanged off the back of a big move higher at the front end of the curve. Lots of Fed speak still to come. Chairman Powell.
Thank God for that.
Talking tomorrow. Your equity market negative a third of 1% from New York. This is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Bloomberg Surveillance, and we welcome all of you worldwide. Lisa Abramowitz and Tom Keene, John Farrow preparing for another hour. John Farrow and we are waiting for comments from the president. We have reports that he may make comments in Tel Aviv as he meets with Mr. Netanyahu. Our Oliver Crook is in Tel Aviv at the Kopensky Hotel on the beach of the Mediterranean, and we will see if we'll get reports through the morning. Right now, as we look at what we do, economics, finance, and investment, we can understand that Michael McKee will go into a great length here on housing, because I've got to go refinance my home at 10% right now. Mike, what do you think?
Good luck to you, Tom. You might want to get a new home, though. Looks like there's some more of them for sale. We did see an increase in new home starts compared with what we had seen the month before. 7% up, which is a little lower than had been anticipated, 7.8%, but better than the negative 11.3% in the month of August. Puts us at a 1,358,000 annual rate. Building permits up by, or down rather, by 4.4% after a 6.9% rise the month before. We're at a 1,473,000 rate there. Now we just see the housing starts number has been revised to negative 12.5 for August, so it is a maybe more significant gain than it would initially appear. Single-family home starts up 2% during the month. That's above about 10.8% above the revised August figure, and multiple unit dwellings are up to 383,000. So looks like some strength in both areas at this point. But Tom, well, let's put it this way. You're not going to get a good mortgage rate, but you will get attention from your mortgage banker, because
they're not doing anything
earlier
else.
Today,
Yes.
Mortgage applications fell to a 28-year low.
We've been
May
looking,
1995.
We've been looking at our credit ratings, and I'm clocking in at a 285, so it's not going to happen.
That may be good enough for a mortgage banker who has...
I don't think that they go that low. But I do think, I'm talking about FICO scores, I'm curious right now, not seeing much of a reaction in markets, just to pick up on this idea that you're not seeing mortgage applications anywhere near anything we've seen over the past 3 decades. There is a question of whether this is a broken market, and this is indicative of trying to fill some of the demand with supply that is not getting unleashed, because nobody is taking out a mortgage, nobody's trying to move, and nobody feels that kind of mobility. How much does it make it difficult to read anything into this data?
Well, it's hard to read a lot into the data, except that it does appear that builders still have some confidence that they can sell homes, because they're the only market in town. There's just no inventory in existing homes right now, because who wants to sell their 3% mortgage for a 10% mortgage? So at this point, yeah, the market is broken, but to the extent that household formation demands new housing, you're going to see some strength there. If that turns down, then you have a real problem.
Mike, stay there. I don't want to go away. We got Weston with Powell tomorrow. I want to get a brief from Michael McKee on that in the coming minutes here. We are thrilled to bring you someone of immense acuity on the algebraic equation of real GDP. He digs deeper than most. Stephen Stanley is with Santander Capital Markets. We were talking beforehand, and I want to go to the 8% solution, which is the 30-year mortgage, which I quote all the time, is 7.9x, whatever it is. And you said, Tom, it's about refinance, and we're enjoying an 8% refinance rate. Can America refinance now and do things?
Well, certainly if you own a home, you're not likely to be refinancing anytime soon, because rates are higher than they've been in a very long time. So the good news is, as Mike and Lisa were saying, is that a lot of people are locked in at 3 or 4% on their mortgages, and they're not really feeling the pain. The people who are feeling the pain are the people that are in the markets.
Critically, I've been dying to ask you this. Do you perceive this as a policy, as a needed policy solution, or do we just let the market play out over the next number of X quarters?
Well, I would say if you pan out and look at the housing market very broadly, the main issue for many years, and continues to be the main issue, is an imbalance between supply and demand. There's not enough supply in the market. So clearly, higher mortgage rates will hit demand, and I think at least temporarily help to bring that market into better balance. But when we think about where we're going to be in 2 or 3 or 5 years, I think the big issue, public policy issue with regard to housing is still going to be one of ensuring adequate supply.
And there's been an ongoing concern about just how direct the transmission mechanism of monetary policy has been, given how people are locked into 3% and 4% rates. The one entity that has felt the increase in rates probably the most directly is the U.S. government. How much further do you see longer-term yields rising, especially in light of some of the defense spending that we've heard being proposed by President Biden?
Yeah, it's interesting because, I mean, I think one of the most overrated influences on interest rates and the Treasury market has always been the budget, right? People always talk about, oh, you know, the rates are going to go up because of the deficits. And it rarely happens, but I think we're in a rare instance where it has really, you know, over the last 3 or 4 months, it has started to enter the psyche of investors. And unfortunately, I don't see any near-term solution here. Getting just a very small increment of fiscal austerity in the spring tied to the debt ceiling agreement was like pulling teeth. And, you know, we're still trying to implement that, and that hasn't been easy either. But I don't think we're going to see anything else on the fiscal front until after the election.
The lack of fiscal austerity, how does that translate into a yield call for you or a changed view on how far yields can rise?
Yeah, I think you have investors who always viewed the Treasury market as the gold standard, right? This is the ultimate quality market in fixed income. And I'd still say that's the case, certainly on a relative basis, but I think people are, you know, maybe a little less enthusiastic. So yeah, it does, I think, translate into higher, longer-term yields.
One more question. I want to bring Mike McKee in with you and go all macro on us as well. What is your new confidence in calling a Q4 GDP statistic? We've been jobs, shocked, retail, shocked, Phillies, shocked. I mean, it's all there. What is your call on Q4 GDP, or do you have no belief?
Well, I mean, we've seen a lot of zigzagging, right? So we'll get a strong quarter and a weak quarter and a strong quarter and a weak quarter. Clearly, Q3 was a strong quarter. And after yesterday's numbers, it looks like it could be as high as 5%.
Wow. You're saying the quarter we're in, wait, the
Q3.
past quarter, Q3
yep.
is a fiver?
It could be, yeah. It's going to be close.
Do you agree, Mr. McKee?
I don't add up the numbers like Steve does, but the folks down in Atlanta say 5.4.
Yeah.
And so that is amazing, which then sets you up for at a higher starting place for the fourth quarter. And it looks like spending has been strong in recent months. So.
Right. As Lisa would point out, both you and your ilk have been wrong for like 3 years, so we'll go.
I was at an event last night, and I said, well, I'm an economist at Bloomberg, and they said, well, at least you're not a weatherman.
Well, we're closer in New England. Speaking of events, Mr. Weston will speak to Mr. Powell tomorrow at the Economic Club of New York. What's the question you would ask?
Well, the question that has to be asked is, what do you do next? And then when you raise rates higher for longer, how long is longer? The interesting thing is at their September meeting, 12 members of the Open Market Committee said they thought we would have another rate increase this year. Since that meeting, 12 of them, not the same 12, but 12 of them have said, well, maybe we don't need it. But then, as Tom pointed out, we have all these very strong economic data points. So how do they square that with what they're going to do November 1st, or do they push it into December, but still raise rates? And then for how long?
No, right now we're going to go back to Tel Aviv. It is a movable feast of information there. Oliver Crook is at the David Kopinski Hotel. This is on the shores of Tel Aviv, looking over a Mediterranean with 2 sets of U.S. Navy fleet out in the distance. Oliver Crook, what does the president's afternoon look like in Tel Aviv?
So he arrived here this morning, and he met with Netanyahu right there on the tarmac, who really greeted him very warmly and is very happy to see the president, saying that the only thing better than having a friend like you is having a friend like you here in Israel. And then he came straight to the hotel here, where he held bilateral meetings. After that, currently, from what we understand from the president's movements, is that he's in the current cabinet meeting with the wider delegation of Israeli officials. And then after that, he will meet with some of the victims and the family of the victims of the attack from last Saturday in the south of Israel. And we expect to hear from the president, as we've heard from him sporadically throughout the morning.
Oliver, what's the scene in terms of potential protests and how the Israeli authorities are really thinking about how to proceed to not ignite more furor, more of some of the unrest that we've seen overnight?
I think that this is the very, very difficult question, and I think that this was one of the questions that Biden wanted to come and help within the region to try to diffuse a little bit. Remember, this is a trip that originally had two legs, the first in Israel and the second in Jordan, and that second part of the trip has been canceled after that explosion at the hospital in northern Gaza, and that makes the task all the harder for the president. And again, what can he walk away with? Yes, he will show his support for Israel. Yes, he will show deterrence, but this third part, the diplomatic part, is what is going to be radically missing from the president's visit to the region.
Oliver, the horror of the last 24 hours, there has to be a process to determine how this hospital was destroyed. From where you sit, with the Israeli media, with all of the press there, what is that process going to look like?
Well, so I can tell you this is going to be a very complex process, and it's important to not jump to conclusions. Very early on, Egypt and many of the Arab nations blamed Israel for this bombing, saying that it was from their bombardments. Netanyahu quickly said that it was not their target, and overnight we've had the Israeli Defense Forces coming out and putting out what they say is evidence, video evidence, but also phone recording evidence that this was not their doing, that this was in fact a product of Islamic Jihad, another militant group within Gaza. They say that 1 in 5, they've said this in the past, of missiles and rockets fired from Gaza actually misfire and fall back on the territory. So I think they'll be coming through all of this evidence, and there was enough evidence apparently for Joe Biden to say that he believed the Israelis, that this was in fact not their doing.
Oliver Crook, thank you for reporting from Tel Aviv. The president meeting with Prime Minister Netanyahu. Lisa, the story continues here, and it's fluid, to say the least, into the Israeli evening.
We keep trying to struggle with how to fold what we do every day, which is markets, into a story that has deep implications socially as well as from an economic perspective. It is unclear, and the lack of information in the fog of war makes it that much more uncertain and difficult to report on, and I think that we're all coming from a place of great humility.
The fog, I should say, of data check is I'm not going to call it a spike, too inflammatory, but a lift in the 10-year yield, and we are right now buttressed up against new highs. We'll have to see how that unfolds coming up. In the equity markets, S&P futures at -19, the percentage a -0.4%.
Still with us is Stephen Stanley of Santander, and I want to get your sense. We did hear a couple of references by Fed officials yesterday to what we're seeing develop in the Middle East. How does the Fed respond to something that could potentially send oil prices higher and further the inflationary pressure?
Right. I think it's very difficult, right? The initial reaction, I think, is one to say, okay, well, we have uncertainty and maybe we're supposed to be patient, let that play out. But as you say, the implications are not clear. In the past, the Fed always looked at an increase in oil prices as a drag on the economy because inflation was always and everywhere low, and now all of a sudden that's not the case. So,
in the blur here, we've got time for one more question. As Lisa mentioned earlier, the silly banks are over. I don't know if Santander reported. I hope they did well. But the answer is now the real earnings season starts, and it's about the top line, which is about nominal GDP. You're giving me a 5 number for Q3.
For real.
We've got some for real.
Yeah.
Add on inflation. Are we completely misjudging the corporate enthusiasm for revenues?
Well, I think, in general, we'll see how the third quarter plays out. But in general, corporations have pretty easily exceeded expectations consistently, at least so far this year. So I think the consumer remains resilient. We've seen that. There's certainly reasons to be worried going forward, but at least for now, as long as the labor market is strong, I think that bodes well for the consumer and in turn for corporate America.
Stephen Stanley, thank you so much. It's not enough there. The Stanley treatment's not enough to get me out of triple leveraged all cash. It's not going to happen.
Maybe next year when we're in
I'm not going to nod a lot on Apple shares. We'll see November 2nd. Stephen Stanley, of course, Santander, U.S. Capital Markets. Please stay with us. Coming up, this is vital, head of all of our hydrocarbon coverage worldwide. Will Kennedy, your brief on Brent crude, $91.43 a barrel. Yields lift in the last 20 minutes.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I wanted them to say, damn! Golly, this is a badass knife.
Oil is the key worry point here amongst the sort of assets we look at. It's a big deal. I am worried about it, but I do think it ultimately self-corrects, right? Every dollar you go over $90, I think, is everyone's trying to use less oil. And I think our economies are just different now than they were, 20, 30 years ago.
Everyone's trying to grapple with how to understand the geopolitical risk in terms of markets that are cold-hearted. And for now, largely looking past it. Ben Laidler, global market strategist at eToro, on earlier with us. Right now in the market, you aren't seeing that much action save for the bond space where you see yields just still hovering near the highest levels they've been going back to 2007, 2006. And Tom, I mean, even though the S&P, yes, it's lower by 0.5%, and you could see a bit of dollar strength here, it really is the 10-year yield at 4.87% if you round up, near the highest going back to 2007.
Well, it's called a benchmark, and folks, I rarely do this. I know Will Kennedy's waiting to give us wisdom here, but it makes this 20-year auction not a Tom Keene small, laughable item today.
Yeah.
I'm wrong. You're right.
Especially given the 30-year auction just days ago. We are going to get to crude in just a minute. I do want to just go over some of the bank earnings that we have been getting. We did talk about Morgan Stanley and how their wealth management net revenue came in light, $6.4 billion versus the estimate of 6.58%. Those shares lower by 3.5%. I do also just want to point to some of the regionals. They are struggling. They are not reporting the same kind of stalwart, solid results that we saw from Fortress Diamond. Citizens Financial came in with net interest income that was below estimates, net interest margin below estimates. Ally Financial reporting a greater degree of souring loans. And you can see both of those shares being punished. Citizens down 3.5%, Ally Financial, Tom, down 2.8%, and regionals may be the real story.
Keith Briette in Woods, Thomas showed with us yesterday, the BKX index has a PE under 8. That's like my ute, Lisa.
And we've been talking about, does Bank of America really represent mainstream America? Questionable with a FICO score of 798, but some do. We do have to focus on oil, given that we have seen that as the place that people are expressing some of their concern about the unrest percolating around some of the attacks, the explosions, the situation in the Middle East. Joining us now is Bloomberg's Will Kennedy in London. And Will, I just want to get your sense of what people in the oil market are looking at to understand how to play a fraught and very unclear story.
Fraught and unclear, I think, is exactly right, and I think that the oil market feels that to some extent. I think the word I would use is twitchy. As things stand, there is no particular reason that oil flow should be disrupted or that oil should go a lot higher from here, although there are scenarios where things become a lot more drastic, and that's what is making people slightly twitchy, as I say. The most extreme scenario is, of course, Iran's involvement in a broader conflict. And that's why some of the headlines today where Iran said that they would embargo Israeli oil imports got the market going. Now, it's a rhetorical device. Iran imports very little oil, 200,000 barrels a day. It gets it from non-Middle Eastern countries, places like Azerbaijan and Kazakhstan, and other people wouldn't join in the embargo anyway. So it's not a fundamentally important piece of news, but this increase in rhetoric gets the market excited.
Will, the map out on 1967 and 1973 is something like 140 miles from the southern edge of Gaza into Egypt, spilled into Egypt, down to the Suez Canal. In any of this, is the Suez Canal at risk?
I don't think that's a fundamental concern for oil traders, but I think that shipping is a concern in more extreme scenarios.
On that.
So the place that people worry about are the Straits of Hormuz, the gap of the place at which the Persian Gulf joins the Indian Ocean, through which all the oil exports from southern Iraq, from Iran, from Kuwait, from Saudi Arabia, from the UAE, they all go through this pinch point over which Iran has a big amount of control. So the most extreme scenario that people worry about, the scenario that would send oil way past $150, is if shipping became impeded through the Straits of Hormuz. Now, it's not likely. I don't think people need to worry about that right now, but that is the extreme case, the worst case scenario that people think about as this situation develops.
Interesting to see. Will Kennedy, if I look then at oil here, it's Javier Blas and your entire team, particularly the team in the trenches here of hydrocarbons, are you framing out a path to 100? Are you even able to do that with this geopolitical uncertainty?
I think it's quite binary. I think the main scenario is that we stay in the sort of 80 to 95 range. There's a sort of $5 risk premium in the market now. That's what a senior oil trader described to me in a conversation yesterday, that this whole crisis has probably added $5. But in most scenarios, there's not significant disruption to oil flows, and things carry on pretty much as they are, and there's concern about the macro and the buyback. But there is a binary scenario. There's an extreme but unlikely scenario where prices go much higher. And one interesting thing we've seen is some activity in the options market where people are buying calls well above $100, which shows that there are people who are buying protection against those unlikely but severe scenarios.
Will Kennedy, stay with us. Lisa, the emotion of the President of the United States speaking to people, first responders and people who are directly associated with the horror in the Eastern Mediterranean, in Israel and in Gaza.
This comes after a reported meeting between President Biden and the War Cabinet, including Benjamin Netanyahu. A big question around what the focus was, given that diplomacy has really been at least put on pause, if not shattered, due to some of the reactions overnight. Now, President Biden going around and meeting with some of those in Israel in the show of support that he is demonstrating.
It's a diplomatic issue here, but what I find so fundamental is the immediacy of this new war, or the immediacy, to take it away from war, of conflict, in that the film is in real time and it adjusts the diplomacy and the optionality in real time.
There's a question also about any kind of escalation, which is what people in the market have been watching. I am curious, Will Kennedy with us still here, and I am curious from your vantage point how you interpreted some of the Iranian rhetoric saying that they were going to call for an Israeli embargo on oil, talking about the potential for escalation. How are people in your industry reading through this to understand what's real, what's potentially disruptive, and what's not?
I think the comments from Iran today were rhetoric. I don't think they will have much real-world impact. As I said, Israel imports just over 200,000 barrels a day. That's minuscule in the context of the global market. It gets that oil mostly from countries in the former Soviet Union. But the rhetoric matters here. The background matters here. And as the situation deteriorates, as Iran's words become more severe, I think that worries traders, that they have to think about worst case scenarios, as I said earlier. And that's the background. They're looking for any signs what worries them about Iran stepping it up.
Well, Kennedy, thank you for the oil brief from you and your team, particularly in Europe and in Dubai. The President of the United States, the filming that we have right now, a bit cacophonous here, in a room meeting with people, first responders, we're told, and victims. A typical Joe Biden moment, you would say, but certainly heartfelt. Lisa, what I would say here is the world awaits comments from the president. I don't know if we'll see that today. We heard comments earlier with the prime minister.
Given that the diplomatic efforts seem to be have been, at least in the short term, torpedoed, there's a lot of focus on how to get humanitarian aid to those in Gaza. The discussion that President Biden was saying, it is the how that they really do say matters in terms of how Israel goes about this. What are they doing? Who is the main obstacle to getting aid to the Gazans that are on the border, trying to just find food and water and medical supplies?
There's the aid as well. I would wonder about the military brief away from this, and that there's still the presumption of some form, and I have to be careful here, ground, air, sea offensive by Israel upon the Gaza Strip, now somewhat governed by Hamas. I mean, it's been that way for a number of years. The military seems to have taken a back seat today to the diplomatic discussions.
There's very little that I can really draw a conclusion from, save for just how emotional this is, especially given that some of the victims and the families of the victims include people whose kids and their family members were kidnapped and being held hostage, just showing how difficult this moment really is.
We're going to leave you with the data, which is moving here as we see images on radio, images with blue and white flowers, the President of the United States meeting with the people of Israel. Yields move, the 30-year bond 4.97%, the 10-year yield up 3 basis points, 4.86%. Standard & Poor's futures at negative 22. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
And that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
That's me, Max. What's up? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Live from New York City this morning. Good morning, good morning. Your equity market session lows down by 0.5%. The countdown to the open starts right now.
Everything everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Coming up, President Biden facing escalating risk abroad. Congress confronting total dysfunction at home as bond yields are climbing to 17-year highs. We begin with the big issue, a single blast dividing the Middle East. An explosion at a hospital in Gaza upending President Biden's trip to Israel before setting a single foot on Air Force One.
Israel, as they respond to these attacks, seems to me that they have to continue to ensure that you have what you need to defend yourselves. And we're going to make sure that occurs, as you know. And we have to also bear in mind that Hamas does not represent all the Palestinian people. And it has brought them only suffering.
Hamas is blaming Israel. Israel is blaming the other side. The Israeli government insisting they have evidence. America wants a full investigation.
I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there not sure. Israel, as they respond to these attacks, it seems to me that they have to continue to ensure that you have what you need to defend yourselves. And we're going to make sure that occurs, as you know.
There has been an uncomfortable tension hanging over the region for more than a week, still seemingly on the brink of a bigger response. The president tasked with attempting to ensure it doesn't become a regional conflict. Team coverage begins right now with Bloomberg's Ollie Crook from Tel Aviv, Kelly Lyons from Washington, D.C. Good morning, Ollie.
Jonathan, you mentioned that tension that hangs over the region, and that's the tension that you go to bed with every day and you wake up and you don't know what you're going to find. And when you wake up to find an explosion in a hospital with, as they say, hundreds of people in there dead, then that is exactly the sort of thing that sends shudders no matter where you're sitting, whether it's in Israel, in Gaza, around the Middle East, or around the world. And that is the event that has really redefined Biden's trip here. For Israel, he's here to provide deterrence, but he was also here for a key diplomatic position in part of this trip, and that was to speak with the leaders of Egypt, the West Bank, and also of Jordan. And that leg of the trip was canceled after these blasts, jumping to conclusions that this was Israel's fault. Israel, of course, has denied that it is their fault. They say that this is a misfired rocket within Gaza that came back on itself. And what we've had so far today is the president today in this building, in the basement here, meeting with Benjamin Netanyahu and the war cabinet. We expect to hear from the president a little bit later, but we'd like to see what he's going to say. What can he possibly bring from this trip? Maybe some progress on aid. At least we know it will not be a diplomatic progress with some of the Arab leaders.
Kaylee, a difficult trip for this president gets even harder.
Absolutely, John. The optics just getting more difficult as he was literally en route to try to make both legs of this trip. As we know, as Oliver just said, it now is only one. And that makes some of what the president is trying to accomplish with this visit much more difficult, specifically trying to deter others in the Middle East from potentially expanding this conflict even further, thinking of things like Iran or Hezbollah. And of course, also meeting the attempt to meet with the president of Egypt, trying to secure humanitarian aid and corridors. As we just heard the president say, there is concern here about the life of innocent Palestinians as Israel is going after Hamas. On the other hand, what this trip does accomplish for President Biden is he is physically manifesting U.S. support for Israel, expressing that support for a key ally for the U.S., asking them what they need. And of course, on the eve of his trip, John Bloomberg also reported the president is getting ready to ask Congress for $100 billion in supplemental funding, not just for Israel, but also for Ukraine, Taiwan, even the border, trying to bundle a bunch together. But of course, the president can't deliver on a lot of those promises for funding until there is a functional House, and we don't have that just yet, John.
We don't have that at all, but there could be a big ask, Kaylee, for a lot of money for aid to Israel, to Ukraine, for the border. How big might that ask be?
It's going to be kind of a heavy lift, John, frankly, if it all gets bundled together. Assuming there is eventually a Speaker of the House, they are going to have a very difficult job trying to get members of the Republican Party to allow Ukraine funding to be passed. There is a wide swath of Republicans that are not supportive of that funding. Even if there is bipartisan support for Israel, tying those two things together may make it much more difficult to get it across the finish line.
Just getting a headline across the Bloomberg terminal, the president saying the Pentagon has showed evidence that Israel did not hit the hospital. That headline just crossing the Bloomberg terminal. The president says the Pentagon showed evidence that Israel did not hit the hospital. Ollie Krug, your reaction to that key headline crossing just moments ago.
So this is what we've been hearing from the Israelis since the beginning. Benjamin Netanyahu saying that planes were not targeting that hospital. And then overnight, we've been hearing from the Israel Defense Forces, and they've been putting out what they say is evidence, video evidence of a rocket taking off, sort of exploding once in the air, and then an explosion on the ground. And then again, they've also put out some voice recordings that they intercepted that they say are members within Gaza confirming this fact. Again, this is information that the Israeli Defense Force has put out themselves. They've put it out as evidence. And if the Pentagon is now verifying that, then that is obviously a meaningful step in really the defining moment of the last 24 hours.
Ollie, this was supposed to be a two-part trip. One part Israel, second part Jordan. And as we know, the President of the United States was supposedly meant to meet with King Abdullah of Jordan, Abbas of the Palestinian Authority, and al-Sisi of Egypt. It was cancelled. Ollie, what is the current relationship like between the President and those individuals currently? And is there a chance that perhaps that summit could reconvene following a headline like that one?
Listen, I think, John, that it's certainly possible. I think that there have been certainly efforts on their part to try to make this sort of thing work. And the problem has been that when you see these things and with inflamed tempers such as they are, it's not necessarily always up to the leaders. It's often up to what's happening on the ground, to the protests, to the people who take to the streets who perhaps will not accept that sort of thing. If those temperatures sort of cool, we've also heard about a potential summit in Egypt that could take place a little bit later in the week. That might be a venue for these sorts of discussions to continue. But really, these are the discussions that are absolutely key if there's going to be meaningful progress in these discussions and if there's going to be any kind of de-escalation and cooling of temperatures.
Ollie, thank you, sir. Great to catch up as always. Ollie Krug and Katie Lyons. The blame game all night following a blast at a hospital in Gaza, reportedly with hundreds killed. Still need to clarify much of the information on the ground in Gaza, which is tremendously difficult to do. As we know, Hamas has been blaming Israel. What we understand from the United States and the President, Joe Biden, saying the Pentagon showed evidence Israel did not hit that hospital, the latest from the President of the United States. For this market, equities right now on the S&P 500, negative 0.4%. In the bond market, we've seen some big moves, particularly at the long end, and including the front end in yesterday's session. The latest news on the request from the Biden administration are reporting suggesting this: the President considering a supplemental request of approximately $100 billion for defense assistance for both Israel and Ukraine. Let's continue this conversation on fixed income with AB's Gershon Distenfeld, Mike Schumacher of Wells Fargo. Gents, great to catch up with you under very difficult circumstances at the moment, given what's happening in the rest of the world. Mike, if we can focus on treasuries, Mike, can this government afford things like that, given what's been taking place in this bond market over the last few months?
Normally, John, I would say $100 billion plus or minus is not that big a deal in Washington. However, and it's a big however, investors have been spooked by Treasury supply. This really came to light a couple months ago with the refunding announcement August 1st. Treasury increased issuance more quickly than people expected, faster than we thought at Wells Fargo. Next announcement's coming up November 1st. That's going to cause some jitters. So I think if the Biden administration requests a very large appropriation, yes, it matters, and I think it's going to cause some ructions on the back end of the curve.
Mike Schumacher, what on earth is going on at the long end of this bond market over the last few months, Mike? Is it just that? Is it just the budget deficit, or is it the data? Is it the Federal Reserve? Mike, what is it?
All the above, John, and frankly, we've been long and wrong, so it's been painful for us too. We've talked to client after client, and you see a number of concerns come to the surface. We just talked about supply, that's number one. Also, the tenor of the comments from the Fed is, I'd say, shifted, become more hawkish. That was certainly evident to us back on September 20th at the last FOMC. Pretty surprising, I thought. Bank of Japan getting a bit more hawkish. Now, it's sort of an odd policy mix out of the BOJ, but I think people are concerned that, hey, not only are Japanese investors collectively not buying a lot of U.S. assets, but you've got the BOJ saying, we're kind of okay if long-term rates go up, so you may want to repatriate more money back into JGBs. All this together has made people a lot less comfortable buying long-term U.S. rates, and as a result, real yields have gone sky high. 240, 250 on the 10-year, about twice where they were at the end of the 2018 cycle. We think it's too much, but it's a buyer's strike right now.
Gershon, this bond market has been punishing. You look at the front end yesterday, you get comfortable with the idea that maybe the Fed's done, get a hot data point, retail sales, and all of a sudden you've got to move through 520 on a 2-year cycle high, on a 5-year cycle high. Gershon, can we just sit on the long end a little bit longer? If you look to the UK, I was looking at a gilt, 30-year, matures in 2050, issued back in 2020, trading in the 30s. And Gershon, I was just thinking, have we fully realised the pain associated with the losses in the long bonds in the UK, in the US and elsewhere?
It's possible, John, that we haven't. Yeah, I agree with Mike. It's overdone. The fundamentals don't support yields at this level. But I think what's going on is a little bit simpler. Is most of the past 12, 18 months, the market has really just not believed that the Fed was going to get this high, that they were going to stay this high for that long. And the market, and what's happened as a result is, yields were kind of stuck quite a bit below where Fed funds were. Now, history would suggest that when that the 10-year actually gets to around the level of the overnight rate, when the market believes that that's going to be the case, that's what's happening right now. It's as simple as that. But eventually, rates are going to come down. Now, it might not happen immediately. History would also suggest that you don't start to see a real rally at the long end of the curve until the Fed actually starts cutting rates.
Gershon, you've spoke constructively about credit fundamentals for a while now, given what's taken place since the pandemic. Does the rate shock have the potential to develop into credit issues?
I think it most certainly does. I think we do have to be more cautious around it, and that's why we're actually advocating up in credit quality, whether it's within high yield or double Bs or even into investment grade. This is the higher rates are gonna make companies less profitable, earnings more volatile, and perhaps should elevate defaults. That being said, as I've talked about many times, this market is of higher quality and the starting point does matter. But, all-in yields now are what people are starting to pay attention to. You look at spreads, they're about average. But all-in yields are pretty high, and particularly institutions as opposed to the retail investor. Institutions for a long time, they had to stretch to buy alternatives in private credit in order to meet their return hurdles. Let's not forget, a couple of years ago, high-yield yields were 4%. Now, with high-yield yields being above 9%, and also other areas, emerging markets, securitized, where you can get high yields, investors can just go for run-of-the-mill type investments as opposed to going out into the alternative space, and that's going to be supportive, we think, of levels from a technical perspective.
Such a big change where we are compared to where we were 10 years ago. Gershon, thank you, sir. Gershon Distenfeld, Mike Schumacher sticking with us. The broader market right now going into the opening bell, 17 minutes away. We're negative by about 0.5% on the S&P. Let's get you some movers going into that open. Here's Abby.
John, weighing on the averages this morning, some of the laggards here. United Airlines heading to its worst day since March 15th. This on the surface, it doesn't look so bad for the quarter that they just reported, but the outlook, it is below the street on both the Middle East conflict and rising fuel costs. Morgan Stanley, similar story, down 2.9% on the surface. They beat both top and bottom line expectations, but below the surface, that $1.41 in adjusted earnings, well, that's a 7% year-over-year slide. Their wealth management and iBanking units both down. FICC slumping 11%, those shares off 3%. And then finally, NVIDIA down 2.2%, falling on tighter than expected export rules. The U.S.'s effort to keep chips out of China. The stock still, though, John, up 200% this year, but down 2% today.
Abby, thank you. The latest on the Middle East, the tension on the epicenter of what is happening in the Middle East, the tension potentially boiling over, an explosion in the last 24 hours at a hospital, the blast threatening to tip things over the edge. You've heard the blame game. Hamas is blaming Israel, Israel blaming the other side. The latest from the President of the United States in the last 10, 15 minutes. The President says his Defense Department showed him evidence Israel did not hit that hospital. The latest there from the President of the United States. Coming up on this program, Chairman Powell taking center stage before the Fed goes dark.
Frankly, the Fed has won the battle with the American consumer, and they're slowing down. And then the question is, what happens next?
That conversation up next.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Frankly, the Fed has won the battle with the American consumer, and they're slowing down. And then the question is, what happens next? I can't predict, but this is a $4 trillion base, $300 to $400 billion a month. So think about it. It's hard to move around a lot. So once it slows this level, it's probably not going to kick right back up.
Bank of America CEO Brian Moynihan weighing in on the Fed. Policymakers out in force, getting their final word in before the quiet period, with all eyes on Chairman Powell. Speaking from the New York Economic Club tomorrow at noon Eastern with David Westin. Richmond Fed President Tom Barkin making the case for patience, saying this: I'm still looking to be convinced that demand is settling. We have time to see if we've done enough or whether there's more work to do. Mike McKee has more. Morning, Mike.
Morning, John. If Brian Moynihan describes this as a slowing economy, I'd hate to see what he thinks is a rapidly expanding one. Latest data this morning are not particularly decisive for the Fed. Mixed news in the housing market as housing starts rose by 7% during the month, but building permits fell 4.4%. So nothing really telling us where we're going from there. But here's the problem, and this is why we're putting it on Jay Powell's shoulders, is at their September meeting, Fed officials, 12 of them, said that they thought we would have another rate increase, at least one, by the end of the year. Since that meeting, 12 of them, maybe not the same ones, but 12 of them have said, no, maybe we might just pause and not raise rates. Well, the problem is they could do that, but what's the justification? When you look at what we have been seeing in the economy, we have very strong jobs numbers, very strong retail sales. Yesterday we had strong industrial production, and we have a sign of some inflationary pressures rising again. So that doesn't look like a picture of a Fed that's going to pause if they're trying to fight inflation. So that leaves us with Jay Powell tomorrow, maybe the definitive word. The Fed goes into blackout on Saturday, so he'll be pretty much the last word, and we'll see if he gives us any real guidance on what they're going to do for November 1st or December 13th, and whether that last rate move is still on the table.
Mike McKee, thank you, sir. Mike Schumacher, what are you looking for from the Fed and Chairman Powell tomorrow?
I think he'll be fairly hawkish, John, but probably not quite as strident as he was on Sep 20. And I think the rationale for dialing it down just a touch is the huge backup in long-term yields. The Fed can point to that, Powell can point to that move and say, hey, look, the back end's doing a lot of work for us. We don't need to raise Fed funds as much. A number of his colleagues have said things like that. I think that's the argument he can make, and it's a legitimate one.
Does that change the nature of the tightening, Gershon? Have you put the emphasis on the long bond and long rates and shift the emphasis away from short-term rates?
Yeah, I think there's way too much focus on whether the Fed's going to go on another 25 basis points or not. That's a rounding error. It's the cumulative effect of all the tightening they've done already. And as Mike just mentioned, the long end of the curve has done a lot of the work for the Fed. So I know the markets will care. I care a lot less about whether they hike or not in November or December. What's really important is what's policy going to be 9 months from now. See, if we go back 9 months ago, remember, the market was pricing in rate cuts. They thought by now the Fed was going to be cutting. That's part of the reason why long-term yields are much lower. The markets now realize that's not happening. Rates are going to be high for a while, and that's why you've seen the long end come up. The question now is what's the data going to be in 6 to 9 months? We're really only just starting to see the cumulative effect. We know Fed policy acts with a lag. How much do we weaken over time? The data right now is very inclusive. That's going to be the key question as we go along. That's going to determine the path of rates over the next 6 to 12 months, not whether they end up hiking another time or not.
So given what we heard from Tom Barkin of the Richmond Fed, and I'll share that quote again, Gershon, I'm still looking to be convinced that demand is settling, but ultimately, this line here, we have time to see if we've done enough or whether there's more work to do. Is that the optimal approach to this, Gershon? If you're at the Fed right now, just wait it out.
Yeah, again, I don't know what it means in terms of whether they should hike another time or not, but I do think they have to look at the data. We're only starting to see it now, and it is inconclusive. One of the things that we look at very carefully is the kind of the relationship between ISM and 10-year treasuries. And it's never been more disconnected than it has been now, meaning that yields should be a lot lower or things should be a lot better. And our guess is yields are going to end up going lower over time, but the Fed should look at what's going on. The problem the Fed always has, it's not a new problem, is that actions they take today do not necessarily affect the data tomorrow. In fact, most of the time they don't. They affect things out 6, 12, 18 months from now. So it's going to be difficult sailing for the Fed, and that's why I think you're going to see a lot more dispersion among the Fed governors as to where we should go from here.
Gershon, this is important. You're framing there the ISM compared to the 10-year Treasury yield. Let's frame it a different way. Let's compare the soft data to the hard data. You ask consumers how they feel right now, not great. You look at what they're doing, retail sales, they're still spending. How wide is that gap?
Well, there is some evidence that kind of the savings that have accumulated over the past few years is being depleted. But, the gap is still wide. And that's why we're going to continue to get volatility. There's really no direction here. You've seen, every number that comes out, it's not like they're all pointing in the same direction. So one thing we should expect, we can argue about where rates are going to be 6, 9 months from now. One thing I think we can almost be certain of is there's going to be a lot more volatility as the market tends to overreact to each and every piece of data, whether it's on inflation or growth or war in the Middle East or whatever it is. We're going to continue to see that volatility.
Mike, do we need to get comfortable with bigger moves at the long end?
We do. I think that's the big takeaway from this discussion this morning, John. Whether it's my comments, Gershon, or President Biden, they all point to markets being exceedingly choppy. And in fact, if you look at interest rate volatility, it's climbed a lot over the last month, as you would expect. It's back to about where it began this year. I think it remains quite high, at least for the midpoint of next year, perhaps farther, as the Middle East sorts itself out, perhaps. We get a lot more clarity on the Fed, the ECB, other central banks. It's going to be a rough ride, so buckle up.
Thank you, gents. Appreciate it, as always. Two of the best. Mike Schumacher there, and Gershon Distenfeld. Mike Schumacher, a bruised and battered Bond bull.